All right. We're live. Good morning, everyone.
Hey, everyone. Hey, Jonathan. Welcome back.
Thank you. Thank you. Feels like it's been ages, but it's been, well, I don't know. I think I was here. Yeah, I was here on Monday, so not that long ago. But yeah, happy to be back.
That 2 hours without you last week were feeling quite long now, nonetheless.
Yeah. Yeah, it's good to be back.
Welcome, everyone. How are you all doing in the chat?
Yeah, let's see where you guys are from. We have a lot of regulars coming in. What's up, Claudio? We got Vinicius. We have what else? We have got Claudio, Vinicius, Rafael, Void. Nice. We got Pierre as well. Pierre. Yeah, probably pronouncing that right. Baba, I love that name. Baba. We got a lot of people that I can't pronounce your name, but we got Akash. Is that Akash? Is that the Akash who was in the competition within Discord? Probably. Think so. We got Samuel. Okay, a lot of people in here. Nice. Okay, so today we're going to be live trading like we always do. Sometimes we do not. And what we got to do, live trading. That's what it is. That's what you guys want to see, right? Actually, you know what? Let me know in the comments. Do you prefer live trading or like educational content? I think I know the answer to that, but I would love to actually, you know what? Let's make a poll of that.
I'm actually quite sure I know the answer to that as well.
Yeah. How are you, Anastasiia?
I'm coming back to life.
Oh, nice. That's good.
No, everyone was visiting me for like a month, so I had someone over constantly in my apartment since the 4th of May. And then my mom was here. That was pretty calm. But then my friends came, and I haven't seen them for a while. So I realized last Wednesday that I'm like LJ, and I've been drinking like 4 weeks straight without even one.
Okay, let's just LJ is not drinking that much. Okay, let's just put the record straight. We joke a lot about that, but it's like he's not drinking that much, guys. Oh, that's fun. That's fun. That's gonna be fun.
Getting back to my responsible adult trader side now.
Yeah. Nice. All right. So you're getting back to life, back to the chart. Time to make some money. I did my CMT. Man. Okay, so I've been ignoring these comments for way too long. But like, if you're making comments about Anastasiia and you kind of like asking if you can propose, like that's. I'm sorry, guys, but that's not the place. That's not the time and place to for that. Let's keep it trading related, all right? Oh my god, I can't believe I had to say that. Okay, so I did my CMT test yesterday, so I'm really happy to kind of put that aside because I've been so focused on studying, and I took this big book and I finally took the book and put it in the bookshelf. I've been reading that book for months and months and months, studying. So it feels really good to be able to kind of drop that and focus on other things. Hopefully, it's. So
you finished the exam. How was it?
It was good. It was. I can't tell you any details about the exam because that's. I would break the code of conduct basically if I tell any details about the exam. But it's a long exam. Things like, in the range of 120 and 150 questions, and for 2 hours. And I think the passing rate is like 80%. So you have to have like 80% of the questions correct to pass. I believe they don't have the specific number, but it's something like that. And it's just a very broad subject, right? It's everything from how to determine trends and candlesticks and statistics and probability and bonds, futures, options. It's a very broad concept. So, and if I'm gonna be honest, like I've kind of procrastinated a bit with studying. So last 2 weeks I was just constantly reading and studying, and so let's see. I hope that I'm gonna pass it, but when you have so many different products going on and you're also going to be studying, it's like I think if I pass this, then I'm going to go towards CMT2, and if I do that, I'm going to have to really really be disciplined with the way they structure the studying. And if I fail this, then I have another try in December, and obviously then I have to be. I mean, if I fail this one, I'm definitely going to pass it in December because I have long time to brush up on what I failed on. But yeah, it takes a lot of time. It's a really, really advanced test, really, really advanced stuff. But very interesting.
Like, you are actually motivating me to go and make this exam as well. I've been thinking about this for a couple of years now, and you're the first person I'm meeting that is actually passing it. Like, everyone is talking about it, and you went to pass it to make it happen. So very interesting, super interesting.
I mean, it does cost money. I think in total it's like $4,000 or something like that. And only, I mean, if I'm gonna take a retest of the exam, that's going to be a couple of $100s just to do the retest. So obviously it's a big investment, both financially and time wise. But interestingly, I saw that the Bank of America was looking for a senior market analyst, and one of the criteria was to have be a CMT charter holder, and that was like the CEO of a branch of Bank of America, and he's also a CMT charter holder. So it obviously puts it's kind of like the highest standard of technical analysis. It's like the gold standard of that professional certification. But it's not really helping you. I mean, it does help you in trading, but I mean, you're studying price and trading, that's going to help you more with trading. So this certification is not about me making more money in trading. It's more about me making more money in the trading industry, if that makes sense. And kind of like that. So for and what we're talking about is the CMT, the CMT. You can just Google CMT Association, and you're gonna get something from that. But if you guys are watching this and you're interested in starting a career in the trading industry, and I'm not talking about being a trader, but actually working as a market analyst or working for a firm in other ways, then highly recommend it. But if you're only looking to get better at trading, then everything you need is on YouTube, basically. You don't really need to go through the CMT path to become a good trader. It's not really about that. But if you want to really be a professional analyst, then yes, CMT is awesome. Amal has a question. Did you manage to fit your graphic card in? No, I don't have time for that. Like, I do not have time for so it's still on the floor, which is I'm gonna bring it up. Give me a second. Not supposed to be on the floor. Okay. Can't put like an $800 graphic card on the floor. I already stepped on it once. I am so.
No way. You stepped on that.
I did, but nothing broke. Nothing broke. Yeah, so I assume this is Mike. I mean, everything I needed. Yeah, okay. So actually, I did create a course through my studying of CMT. I did create a course on the fundamentals of technical analysis. So everything that I did learn from CMT, I've put that into a course that's now available inside the AlphaBeta labs for free. I believe it's free, right? It's free. Yeah, yeah. Go in there, check out that course. I don't think it should be free.
I don't think it should be free, to be honest.
No, I like that's the type of course that I would want to create and sell, if I'm gonna be honest. So, yeah, Mike, put a price tag on it, and let's make some money. But right now it's free. So go to AlphaBeta Labs, keep learning, and you know what? Learning technical analysis and then applying it to the markets to become a good trader. It's all about understanding technical analysis, and then just you did. Oh, AlphaBeta Lab says you did sell it to ABL. Yeah, we can talk about that in private. I've got some interesting information for you regarding that, but let's keep it between us. Anyway, so what was I saying? Yeah, so the best way to really apply technical analysis to trading is, I believe, learning technical analysis and then, being creative. being creative in the ways that you are combining the knowledge that you have from technical analysis and then putting it to work in the markets. That's what I would do, and that's what I did as well when creating my system. Let's jump right into the charts. Where do I have that?
Yes.
Let me see if I can pull that up. We do have some interesting movements this morning, especially on some pairs that I'm watching, and that is specifically Euro JPY this morning I really like. So we're going to look at Euro JPY. Did some analysis this morning on Euro JPY. Oh, wow, it broke out. Damn it, I missed that one. Okay, so we're going to take a trade on Euro JPY because I'm looking to take it up to 166.550, and we have a confirmed breakout on the 15 minutes. So I'm going to go in, and I'm going to open a new position on my high stakes evaluation that I'm down quite a lot. Interestingly enough, I had a great trade on gold. And if you guys saw that on Monday, I had a great trade on gold, hit my original TP, then I moved that TP a little bit up. It went straight down, took out my stop loss. So what? Yeah, it's just incredible. It's such a stupid trade. I'm going to show you what I mean in just a bit. But the most perfect trade, and I still lost money on it. Like it's so frustrating. And now I'm down significantly on my hyper. It's not even hyper growth. It's high stakes.
Wait, was it gold again?
Yeah, gold. It's a good same time all the time. It's hitting.
The same thing for me happened yesterday. I entered gold. It hit my stop loss, and now it would be back in the profit area.
Seriously hate gold. It's just I do not like gold. Okay, I'm entering in one risk position on Euro JPY right here. I will enter that one because I need to get in on this breakout, and then I will show you what the plan is. Okay, so the plan right now, what time frame I'm on? The 1 hour. Okay, so this is the trade. I'm entering in market right here. I have my stop loss below here, and my target is 166.550. Okay, so looking at the daily, what we have right here is a level that Euro JPY has not been trading above since November in 2024. We have a breakout right now. We confirmed the breakout with a daily close above this level yesterday. Going into the 4 hour, we have a really good structure right here on the 4 hour with a local breakout happening right now as well. And then if you go into the 1 hour, you have that 1 hour candle about to close in 11 minutes. I'm going to be adding to this position if we have a break and retest of that breakout area. Good stop loss all the way below the invalidation of the local trend. Looking at the 15 minute, we do have a confirmed breakout on the 15 minute, on the 5 minute, and obviously, of course, also on the 1 minute. And I would somewhat expect a move down here, but I want to make sure that I get in on this because I do see strong momentum coming into the market right now. I want to look at the I'm going to look at the volume, do some volume analysis here, see if we can make any sense of what we have in terms of volume. So tick volume, yeah, that actually looks really bad. Like that is not the type of volume you want to see on the breakout, because what we see right now is, at least on the tick volume, we see that price is, the volume is not confirming price. So what you want to see in a breakout like this is you want to see volume increasing on the breakout. Right now we see volume decreasing. So we have a divergence between volume and price. Looking at the OBV, which is, okay, so OBV is in an uptrend, but we have not broken above this level on OBV. You can see how this is an important level to break above on OBV. But then again, this is tick volume, and the volume is calculated using tick volume, which means that neither the volume bars or the OBV is calculated in a way that they're not designed to be used with tick volume. They're designed to be used with real volume. And for that to be possible, you have to go to the futures market where the volume is reported to a central exchange. But then on TradingView, without the data, we have a 15-minute delay. Do we have a futures contract for Euro JPY? No. How do we do that?
Why? No. You have only for the main currency pairs. So everything is US dollar, like only the main one, majors.
Right. Okay. So I gotta now it should be possible to do, because you have for the yen. So if you there's a future contract for the yen, right? JPY.
Yeah.
I believe there should be possible to do a synthetic chart where you combine the euro futures and the yen futures, but I also believe that they're both priced against the dollar, right?
Yeah, they was priced against the dollar, unfortunately. And secondly, doesn't mean necessarily that the volume on this specific currency pair is going to be increasing if it increases on the euro future or the JPY futures. You know what I mean? People can trade those and then they might not trade euro JPY. I would say maybe by the correlation between USD JPY, so the 6J futures contract, you can see if the volume is increasing in general on the USD JPY, and then by correlation on the Euro JPY. Maybe that would make more sense. What do you think about that?
Yeah, definitely worth looking into. Yeah, I gotta look. I gotta look that up. See if it's possible to create some type of look at the correlations and yeah. Not something I'm going to do now, though. I want to look at, I got this subscription to SeasonX. I believe in the very beginning when you joined the live stream for the first time, you looked a lot on SeasonX. You had a lot of screenshots on seasonality. So I got this is, actually, like, I did have to think quite a lot there. And did feel like, yeah, this is above my pay grade. So we'll do that. We will look into that. Okay, so excuse me for being confused, but I did create a an account with SeasonX, and then I figured, wow, this is expensive. It's like $49 a month, and then if you want to get commodities and other things, it's like $95 a month. And I'm like, wow, okay, so I need to make, I need to make that back on the ideas, and so far, it has not.
Yeah, but
made it back.
Also, actually, what you can do is like a life hack. SeasonX would hate me. The patterns don't change so often, so you can make a folder for yourself or like a PDF with all the folders and patterns for every single asset that you're interested in.
Yeah, so just give me a second. I'm actually in contact with them to kind of try to create a deal, and with this. So this is let's not go down that route. But if you're seeing this, if you don't accept my deal, then I will screenshot everything and I will save it on my computer, and I don't have to pay anything. Yep, that's leverage right there. That's Trump type of negotiation right there.
Yes.
Okay, so let's actually. I want to share the SeasonX here. I can show you guys something interesting. Let's see, we got it right here. Okay, so this is Euro JPY. The current date is right here. So let's look at the 25 years. So this isn't really telling us much, because what I'm interested in these seasonality chart is, of course, the low here, and so the extreme basically. So looking at the chart here for Euro JPY over the last 25 years, what I'm seeing here is not a lot of movement basically. I mean, according to this chart, Euro JPY usually moves sideways throughout all of June. So this is not really, adding anything and any type of confirmation to my trading ideas, and that's what I feel is lacking here a little bit. Because if I'm going to be using this, then I'm going to be using it, maybe look at it once a month, and then is it worth me paying almost $100 a month to look at this for 20 minutes each month? And I think that a better way to do this would be to you have websites like Yahoo Finance and Dukas Copy and sites like that have long-term detailed price history of the forex market. So what I could do is just download the price history for each of these pairs, and then just put it into an AI and ask the AI to tell me information about the data. Tell me like during what years, during what month of the years are, basically look at patterns, and then ask it to put it into an Excel and create charts from that. And I'd have the same thing. And I can probably, go on Upwork, create a job post for this, and pay a coder, let's say $400 or $500 to create the system, and then use that instead of paying long-term $100 per month. So I think actually CSNX was probably a really, really good tool before AI. But now with AI, you can find these patterns most likely yourself, or just hire someone who is good with AI and coding and create this. I mean, obviously the backend on this is quite advanced, and you can go into the screener and you can, let's say, want to find ideas that have above 75% win rate and holding time is 31 to 60 days. And we look at 20 years and we're going to look at the currencies. So what we'll find here is, nothing. Nobody cares about these pairs anyway. Let's look at 50. So what we have here is, let's say, NCD USD. Okay, so on NCD USD, during this time period, we see that if we buy today and then sell at the end of July, 65% of time we would have made a positive return. But then again, we see a dip here in the beginning. So what would make more sense is to sell here, and then buy back here, and then buy here and sell here, and that would give us a 70% win rate. So this is what I like about this tool, because you can get the numbers by just moving around on the screen. So NCD USD, now the way I would use this is, okay, we'll look at the beginning of July, and we can go to the NCD chart on TradingView, and then I can just overlay what I'm doing here. So let's stop the screen here. Let's go to TradingView directly. Look at the Euro JPY pair trade that is retracing back to the breakout area. I'm going to set some alerts here. I'm going to set one alert here. Let me fix this. How do I show the alerts? Lines, go into settings, I believe. Alerts, alert lines. Okay. Not the alerts line. I have to show the plus. Okay, that's the one. Okay, so I'm adding one alert here, and I'm adding one alert above. So I will get alerted when the breakout area is tested, and I get alerted when you have a new breakout. So either of these points is confirmation for me to add more. A confirmation of a bounce here, I'll add some. A confirmation of a local breakout, and I'll add some more. But let's look at the idea here with CSNX. So I looked at NCD USD. Go out to the weekly. Let me just copy paste the chart. So we're looking at from the beginning of July till the end of July.
I'm going to leave you for 30 seconds.
Sorry?
I'm going to leave you for 30 seconds.
Yeah. We're going to be counting 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Come on, guys. 13, 14, 15, halfway there. 16, 17, 18, 19, 20, 21, 22. Oh, nice.
Am I getting compensated for the last
10 seconds? I like how you say, like, I'm gonna be back in 30 seconds, and then it's actually 30 seconds. Like, whenever someone asks me to do something, like, yeah, 2 minutes, but that's never 2 minutes. If I say 30 seconds, it's like, that might be 2 minutes, you know? But you actually like, I'm gonna get back in 30 seconds. I'm like, okay, we'll see you in 5 minutes, but then you're actually back. Mike, stop spamming the chat. Nobody cares. Nobody cares about you. He's trying to be funny. 72, 54. Yeah, it's very fun. Okay, so here's the chart, right? We can see that in the beginning of July, it's supposed to have a bottom. By the way, we do have a lot of people watching. They really like when you're on the live stream, Anastasiia. I've looked at the numbers, and whenever you're on, you're doing your analysis, the numbers just go straight to the upside.
And I didn't even start doing the analysis.
You haven't even done the analysis. Imagine the numbers when you start looking at the charts. So, okay, I'm going to get to my point, and then I'm going to let you speak. But beginning of July till the end of July, that's the trade for NZD USD. So if you look at the weekly here, we can draw some lines here. We got, where's July? Okay, here. That's a very small window, but okay. The bottom was actually created here in like February, March, April. So if you look at that chart again, February, March, we had a bottom, right? Which kind of aligns with the chart below or in the background. So you see in February, March, we had a bottom here in the seasonality. And then, of course, we had that bottom. And then it went up, supposed to form a top in April. It did form a top in April, went down in May, and it did. It formed the bottom right here in May. And then we're supposed to be hitting some type of top here in June, right here in June. And we are hitting a resistance in June. So the idea with this chart would be to kind of consolidate within this area. But we have having breaking news here with something with a nuclear deal within reach in Iran, saying it could be achieved rapidly. Let's look at the market to see if we find any interesting movement based on that. But what we're seeing here is, looking at seasonality, we could expect a slight pullback in the next week for NZD USD, and then we should see more upside, and that should also reach a long-term top because of seasonality. This is the very top of the chart, and it's going to go down. Now, this actually kind of makes sense because if you look at the chart here, we have a lot of resistance above. If we go to the daily, this would be the window of opportunity because this is from the 1st of June to the end of June right here. But this would be the window of opportunity. And then you have a big resistance zone around this area. So we could perhaps expect a move like this. Maybe that would be invalidation. Now the risk to reward is just not really here. It's still above 1, but this is what I'm thinking. Within this time window, chances are that we're probably going to be like retesting this level below. And if this seasonality pattern is correct, then we could perhaps move from here to this level above. So it's definitely an interesting tool to look at. And if we start trading within this area and we see like a low time frame breakout, it might confirm that seasonality, because the win rate of this is actually 75%, which means over the last 20 years, it has been profitable for 75% of the time, which is quite significant. So it's definitely interesting. Okay. What are you looking at, Anastasiia?
Looking at DAX, we had a question about this in the beginning of the stream. Let me go over it quickly. So there was a question, and I'm not going to find it. I'm not going to even try because it was all the way in the beginning of the stream. But whoever asked about DAX for me to make the analysis on it. So if you go a little further from the bigger perspective, let's go to 4 hours, for example. DAX has been holding above the area of, 23,900 since essentially the mid of May. So we see like quite important level here. We had tested it before several times, the breakout and the pretty much technically perfect break and retest of the same level. Now, if we look at the 4-hour candle, which is recently created, we see a beautiful engulfing candle to the upside. So we have the overtaken the previous 2 candles as well. Now going lower on the 1 hour, we also see that the point of control from this current week, so the maximum volume currently is on 24,000 straight, which is essentially saying to us that for the past 2.5 days almost, the majority of the volume was below the current price, and the recent candle, the how it closes, we talked about this last week. Now I always want to see how the candle closes above a certain level, like how strong is it? Does it have wicks? Does it not have wicks? And what I see here is a candle almost barely like have any wicks. So it's wickless candle, which shows the strength and the momentum of breaking through the current volume. So we see that the buyers have definitely taken the control over. We also have the break of the previous 1 hour high, which is also the confirmation for me of the break and this twist of the structure. We also have the daily point of control below the price, which right now, if we go lower, we will see that the price is currently testing it. So we had the test from one side, now we have a test from another side. So also break and retest, but the daily point of control, so the current maximum volume is also below the price. And we have this dotted line, the blue line, which is a developing point of control of the week. So we see that the prices, that it shifted, it was above the price below. So yesterday it went above the price, today during the morning. So it went above the price, so the price shifted under it, which was a confirmation for us of the continuation of the downtrend for a local movement. We see the price tested it as a resistance and also broke through it, and it shifted once again. So the price is above, the developing point of control of the week is below, which is also the confirmation of the uptrend. So I have completely bullish bias on DAX, and I even took a trade on it a little bit earlier here. So it's a little bit in profit right now for me. We'll see how it's going to go. I do expect that it might dip to the point of control of the week still, so it might still go in the drawdown. And my targets on this would be 24,170. That's the first one. To the point of control of the previous, that's the developing point of control of the week. And this area here, which is 24,255 here. That's the second one. So I'm waiting for 1 to 3 restore reward, or in the worst case scenario, 1 to a little bit less than 1 to 2 restore reward, which wouldn't be preferable. But again, if the price goes up and holds above it and closes on, let's say, 30-minute candle, weekless above the previous weeks here, I'm also going to add to this position, which is going to be the confirmation for me for the strengths of buyers again. And what I like about DAX as well is that if you look at it from the bigger perspective, we will see that the same zone here has been quite an important zone, which the price has been holding for a while. So 24,000 was a point of control of the week since the end of May. So this is the last week of May, the first week of June. And the price has been constantly accumulating volume here. So the fact how strong it closed above this zone, it also shows me that we don't only have this zone as a support, but also the volume zone between 24,000 and 23,950 level, which is also confirmation for a bullish bias. So yeah, even if we get stuck, and actually even if we get continuously stuck, and this consolidation is going to be good enough for me to close the trade already by that time. So that's DAX. That's DAX. And Omar is asking, do you use Footprint? I do use Footprint, but not on TradingView. TradingView introduced Footprint recently. I don't have access to this because I bought access to this. It's like $50 per month also on TradingView once. And it was a complete disaster, to be honest with you, because even if you buy data, so I have a data bot for the futures, which is only like $5 a month anyway, but it doesn't get the right numbers. So although you have the subscription to the centralized data exchange for the TradingView, it still is not correct numbers for the Footprint. So like TradingView is great, nice, but definitely not for the volume, in-depth volume or the Footprint charts. Like that's not what you want to be using there.
Right. So we got some really good movement on gold right now, and I believe it could be because of the news here, Iran coming out saying that a nuclear deal is likely to be achieved rapidly. Obviously, that is might be what's bringing down gold, because gold has been moving higher in when there's a lot of uncertainty. Gold is an asset that likes to trade higher, and I believe maybe now because of that we did see gold moving lower. The move to the downside on gold happened at around, let's look at the 1 minute. Yeah, it have. So the news came out at 11, and that was exactly when gold had that move to the downside. You can see the news coming out. Let me share with you here. You can see here that's the news event right there. Oh, that's a bit big. But you can see it. So that is the news, and that came out right here. So obviously, this news event was a big trigger for a move down to gold. We do see rapid bulls coming in quickly and defending the area below, which kind of makes sense because it is a support area. But the question is, can we reclaim this level, the area that broke based on the news? And if we do see a rejection up around this area, then that might make sense to perhaps look at a short. The news provider that I'm using here is called Financial Use. I'm going to link I can link it in the comments for all of you. It's a good site that updates whenever there's something new coming out. So I do have it open on my left monitor here at all times. So that's a level that I'm going to be monitoring. I'm going to change the settings here. I can add the alert. So I'm going to be setting an alert right here. See if gold is testing that area. Let's look at the Euro JPY. What was the effect on Euro JPY? So the news came out here. It might had an effect on Euro JPY as well. Had a good little push to the upside, but immediately retraced, but it's getting that push to the upside again. Let's look at, I'm going to put an alert here on NCD USD as well. If in case we break above these daily levels right here and below, because I want to make sure that I monitor this one. If in case we get that breakout or just some movement, because I want to see if this aligns with the seasonality patterns. What settings should be set inside? I don't know. Just these, those news that you got it right here. Those are, it's going to come up no matter what settings you have. I think news is not an indicator we can depend on. Well, new fundamentals drive the market. Okay, so if you understand the news, you understand why the markets are moving. Technical analysis is with technical analysis, you understand where you can enter, where you can exit, and what levels to manage your risk on. Fundamentals won't tell you where to enter, where to exit, and manage your risk, but that's technical analysis job to do so. However, the fundamentals will tell you why the markets are moving. And yeah, fundamentals drive gold a lot, definitely. And fundamentals drive all markets. If, when you have no fundamentals and you have no news, then you can look at price moving quite technically, but it's the catalyst that breaks levels. I mean, you're not going to see the dollar break, yearly lows without any fundamental weakness to the dollar. That's just how it is. Now, I'm not saying you need fundamentals to trade. Absolutely not. You can trade whatever. How many pairs do you trade at a time? I usually try not to have more than 4 open positions at a time. Usually just 1, but the pairs that I trade is all the majors, all the minors, and all the crosses between them. So you have the list here. Got all the USD, Euro, GBP, AUD, NCD pairs, CAD, JPY pairs, and then the US indices, the dollar currency index, all the European indices here, including the Swedish one. And then all the commodities, including things like orange juice, nat gas, silver, coffee, gold, copper, and then the yield spread of Germany, US, yen, Japan, and GBP. And then I look at future charts as well to look at the volume, and then all the crypto pairs that I'm watching. So quite a lot of pairs, but I do look at them from a more high time perspective. So I do have the time to kind of set all the alerts and everything.
About the fundamentals. So the fundamentals are like a driver, like the way I see it, it's a bias, it's a reason where the price goes, and it's a direction. Like if you analyze the fundamentals and you see that something is happening overall, for a longer period of time, it can be different things. It can be like, for example, Trump's tariffs or Trump's canceling his tariffs. It can be decreasing or increasing interest rates, or keep holding interest rates. It can be inflation that is like stable. It's going to give you a bias in the direction in which you want to trade the market. And then technical analysis are going to give you the entry, because fundamentals obviously are not going to give you the entry. You might know that you want to buy something, like you want to buy, let's say, gold, right, for example, but you're not going to know where to buy it. Is it the time to buy it now? Is it the time to wait a little bit longer? Like, what is the perfect timing to decrease the potential drawdown and increase the maximum risk to reward and maximize your profits? So I think the combination of two is crazy good. And of course, you can dive. Like in fundamentals, it's like a black hole without an end. Like you can keep digging into this, and there is so much data and so much reports. Like there is so many things that you can study, which doesn't mean you need it to be able to trade successfully. But I think understanding the overall picture and overall bias can give you not only better trades, but also more confidence in what you're doing. Because instead of trying to guess and, feeling a little bit maybe unstable when the news come out, if you understand what's happening, you're going to be more confident in taking your trades, because you know that what's behind it is backing up your idea, your bias, your trade overall, in the direction of the market. So, for example, for me, when I started studying economy, and I'm still doing it, it's a lot, it's a lot to understand and wrap your head around. But when you even start and give it a shot, it already builds a very strong foundation for yourself. So I'd go for the mix of fundamentals and technical, to be honest with you.
Yeah, that's definitely the best approach to find that mix between the two, and that's something that I'm trying to do. I'm I do feel that I have a good foundation in technical analysis. I do feel like the knowledge that I have with the technicals is something that I feel confident in trading. But I would love to understand more. So my long-term plan is to find a system where I look at macro. So I first look at the macro landscape, the fundamentals, to get an understanding of where the market might be going and why it might be moving. And then I pair that with the seasonality and like the bigger cycles in the market. And then finally, the third step would be to apply technical analysis to look at where can I enter and where can I exit based on what the fundamentals are telling me. But that's kind of like, that's a long journey, because I want to be in the beginning, when I started with technical analysis, the goal was to become an expert at TA. But now that I know TA and I feel confident in my knowledge of the technicals, I feel I want to add something on that. I now want to become not an expert at fundamental analysis, but perhaps very good at the higher level fundamentals, like looking at things like what the central banks are doing and with the interest rates and central bank divergences, and getting a feeling for the overall macro economy, and answering simple questions like, are we in a macro, are we in a risk on environment or risk off environment, and what's the trajectory of the dollar? Because if you understand where the dollar is moving, it can really help you in forex trading, because there's a lot of different pairs paired with the dollar, obviously all the majors. And if you can find seasonality and fundamentals aligning with the dollar pairs, I think it can really really make some good get some good swing trades based on that. It's very complicated. It's not easy.
It is complicated. What do you think about USD JPY? Did you look at it today?
USD JPY, yeah, I'm I'm long USD JPY on my personal account, and I've been for quite some time. Let me see if I have the long setup here. Which one is it? So this is what I'm looking for on USD JPY, and I believe that I'm going to look at the seasonality on this as well, because the cycle, the cyclical nature of USD JPY is very clear. You can go out to the weekly here, and to me, this is a very clear. It paints a very clear picture here with clear invalidation. So I've already gone in depth on this for quite some time, but the idea here is basically that we're at a cyclical low for USD JPY. However, we do have weakness in this move. It is a downtrend leading into this move on the weekly. We have not had a downtrend. This is just one up move, one down move, and then one trending move to the upside, and a trending move to the downside. So we do have lower lows, and the fact that we have a double bottom here on the weekly might actually signal weakness because you put it in the context of the other tests, and there's no double bottom here, just a V-shaped recovery. So if you compare the double bottom with a V-shaped recovery, the double bottom is a weaker a weaker recovery than a V-shaped recovery. But on the daily, we also have a double bottom inside the reload zone, and it looks like we're about to break above this descending trendline area marked with a number 1, and I'm targeting first the range EQ area at around 150, but eventually I'm looking to take this up to the range high area at around 160. So I'm currently long here. Let's see on what it looks like on the 4-hour. Yeah, so I am currently long here based on this. I do believe that 146 would be the FTA of this move. We're back in sort of a bullish structure here. Number 2 here, that resistance at around 148 would be next resistance. But I mean, I'm holding this for a while. I have a good entry. I have a good high time frame ID here on this, and this is just dependent on I'm going to show you something else. We have also the correlation pair between all the USD pairs. This is I have not adjusted the levels here, but you can see that every single major pair paired with the yen is in a bullish market structure, creating higher highs and higher lows, while USD JPY is the only one being neutral or bearish. And yesterday we actually broke above this level. So yesterday we started entering the bullish territory, and I feel like compared with all the other yen pairs, USD JPY is lagging behind here. There's definitely relative weakness in USD JPY. And sometimes you look at relative weakness and you say, okay, so I want to short the one that is weak. But in this case, I feel this is a case with USD JPY being at high time frame support. It's relatively weak, and I feel like it has some catching up to do. So I feel like USD JPY is going to be catching up to the other yen pairs. Let's actually go in and take a look at the seasonality of.
I just took a trade on USD JPY, well, in 6J. And yep. Expecting the USD JPY also to go to the upside from now on, which is, well, basically I'm selling the yen futures. Right?
Nice.
It's a negative correlation. So that's the reason I was asking you also.
Oh, you're basically long
on USD JPY, yeah.
All right. That makes sense.
So
no, LJ said something about being long as well. I want to show you the Seasonex chart here. Even though it's not super obvious, we're not at a very low, like an extreme low or extreme high. The indicator that shows all this is not an indicator. This is me manually adding all of this to the chart and then adjusting every level and everything manually. You can see if I move this one, then it's going to adjust all the levels. So this is just me adding all the pairs and then manually adjusting everything. You can press the plus here, where you can add more pairs to the chart. So for USD JPY with the last 25 years, we are actually at a high. So even though seasonality is saying that it's going to close higher than where we are now, it's not really at an extreme. But if you look at the most recent years, it paints a much clearer picture, and maybe it makes more sense to look at the most recent time, because if you think for this analysis, it's better to share it directly. So this is 25 years, and as you can see, we're closer to a high extreme than a low. But if you go back 15 years, it's sort of the same, but 10 years, it paints a more bullish picture. And then 5 years, it's very, very obvious. And then we're looking at the beginning of July as the very top. So the question is, are we in the same market regime that we was 5 years ago? I'm not really sure we are, because 5 years ago, I believe that was the height of where a lot of liquidity was injected into the market based on COVID. I mean, that was 2020, and that was when the market rallied after the COVID crash. So are we in the same scenario? I don't think so. So the seasonality here, I would say, is...
But it's not taken only the 5 year ago. It's taken the past 5 years, including 2020, 21, 22, 23, and 24.
Yeah, that's a good point. That's a good point. So yeah, I guess it makes sense in a sense, but
it makes sense because then they started. First of all, the liquidity was injected, but then they started to tighten the interest rate, and the interest rate was extremely tight at that moment. Now, something similar that was happening now is that the central bank, Federal Reserve, is not bringing down the interest rates based on Trump's policies. So right now we are somewhere similar in terms of that, because they first injected lots of liquidity, the market completely rallied, and then it started to very much tightening, and to the point that people were like actually scared of how far the Federal Reserve can go with interest rates like this. And now also Trump is expecting to cut the rates, and Federal Reserve and the Powell said no way until we actually see the effects of the inflation, how inflation is going to go. And today the CPI report is forecasted to be slightly higher than previous, and if it is, then we are not going to see the rate cuts the next time on the next press conference neither. So it does make sense. It does make sense for the past 5 years to look at this as an X in terms of USD JPY.
Yeah, it does make sense. So even though it's not completely agreeing with the idea, at least if you look at 25 years back and then 15, 10, and 5, they all align, at least. I mean, it's all every time period you at least see that prices will be higher in the future based on seasonality, and so it does add some confidence to this idea. I have a question here about what's the best cost-effective news agencies to follow for good fundamentals. So the ones that I have is Bloomberg and Financial Juice, and then I also have a subscription to a macro newsletter or community, whatever. I'm not going to say the name of it yet because I've only had it for a week, and I need to kind of reevaluate it if it's good enough to be sharing here during the live streams. But Bloomberg is really good. I think it's $100 for yearly subscription, and I mean Bloomberg is really Bloomberg is great. They're very quick with in-depth articles on breaking news, and covers
but
most of the things happening.
Biased? They're trying to sell the news.
I don't know. I have no idea. Maybe.
Maybe. The Bloomberg has a Bloomberg terminal, and in my own opinion, it's the best thing you can get regarding the fundamentals, like the best. But the problem with it is that it's almost 100K per year.
Yeah.
So, but
yeah, the Bloomberg terminal, I haven't tried it myself, but I've seen I've seen examples of it, and yeah, it seems like a really good service. And I mean, I do follow Bloomberg, like their live stream on YouTube. But I mean, I think they have really good coverage of the news.
Yeah.
But I mean, Bloomberg, it's like $2,000 a month. It's just insane. But yeah, it's like M76BB says it's aimed at institutions. But it would be pretty cool to have one.
It's the best. I also use a trading economics basically because they break their news without a bias. They just like boom, this is what's happening. This is a data. This is a past data. They have the stats, which I really like as well. So I keep sharing the same basically things. So wait a second, I'm gonna pull it up maybe. So
yeah, I use trading economics as well. It's a very good site, and I started using it after you started talking about it.
Yeah, so it's really good. We talked about this with LJ as well another day, that they break it without trying to sell it to you. And if you don't understand anything about fundamentals, I think it's also the great place to start, because they actually have like a short article. It's just a couple of signs, but it gives you the briefing on what's happening. And beside this, what I like about it is that if you go to the calendar and you, for example, have the CPI, right? You go to the yearly CPI, you click on it, and it's going to give you the stats from the previous months. So you can actually see visually that trend where it's going, because the numbers sometimes can be misleading, or it's difficult for us to follow the numbers. You would need like an Excel file to keep track of all of this. And here you actually have the visual representation of everything, and you can have it for 1 year, 3 years, 5 years, and so on, which is quite cool as well. And another thing that I'm using is called Yardeni, which is specifically for the US market though. So it's called the Yardeni Research, and let me also share it back again. And it also gives you a calendar and basically a whole bunch of different things like charts, with different fundamentals, macroeconomic calendar, and like different overviews on different sectors of the economy. So if you wanna dive in depth on what basically the specific sector of the economy in the US is doing, it can be futures, stocks, options, anything you want. I think Yardeni is a place to go. It's called yardeni.com website. And then you click on the charts, for example, and then you go here, you have different indicators for economy, leading, coincidental, and lagging indicators. You have economical calendar, bar charts, and different things like that. So it's a lot of cool stuff. So that's my second.
Yeah. So what do you think, AlphaBeta? Yeah. First, Yardeni, I've been subscribed to them, and they're good. I felt that I didn't have. It was quite a lot, and I didn't really have the time to go through all the data and all the news that are staying out. I felt like it's a bit too much information. I'm more interested in being able to get like what I would love to have is just a fairly detailed summary, and not having to I would want someone else to do all the research and gather all the data and say here's what I found, here's a summary of that research, because I don't have the time to do the research, but I would love to have this interesting data, Okay, LJ says he is using Refin, whatever that is called. So I feel like, okay, so LJ and then AlphaBeta Lab says do he have access to the AlphaBeta Lab YouTube channel is what I'm thinking. And do he have a deal with this company is what I'm thinking, because this is some really good advertisement right here. Because how much does it cost? Let's see. How much does it cost? It's supposed to be something similar to Right. Okay. So this is. Is this? Who's behind this? Is it? Yeah. Okay. Let me see. How much does it cost though? $22K per year. Yeah. Okay. Never mind. I'm not gonna buy that. Okay. Let's look at gold.
LJ says in the comment that he's using Refinitiv.
Yeah. Is he paying 22K a year for that?
I mean, like, if you are into fundamentals, these things are really worth it. Like Bloomberg terminal is just amazing. That's just
Yeah, probably.
like wow. Obviously, you do need some time to like research this, and everything, but
yeah. All right, so we do have during the live stream today, we do have a core inflation rate coming out later, so that's going to be very interesting. CPI, we're going to be covering that, of course, and for most, probably best not to trade around that event. So before we go into gold, I'm just going to quickly look at the Euro JPY trade. Okay, so it's looking good here. We had a test right here, so I got my alerts ready here to add to the position here. And I'm going to show you how I manage that. I'll show you how I'll do it live here. This is the this is a MetaTrader account. And what I'm going to do here is I got the stop loss down here. Let's just move that a little bit so we can get that one up. So here's the stop loss of the position size calculator. Do we have any TP in? No, we don't have any TP in. We don't have to add that now though. So let's go into the lower time frames here. The way I'm going to do this is if we have a breakout here, then I'm going to market enter. If you just have a tick above that, just a tick above that wick, right? And then this will be my new stop loss. What was the take profit on this one on TradingView? It was 166, I believe. Put that in here, 166. And then I'm going to be adding 0.5%. Because if I move this stop loss up around this area, it would mean that the original trade becomes like closer to 0.5%, so I can add. No, not 166. That's up here. What was the actual? Am I even looking at this the right chart here? I'm very confused. Okay, 166.50, 166.55. Okay, that's better. So that's the TP, and then that would be the new. You know what? I'm gonna go in with bigger size on this one. I'll be risking 1% on this, and I'll be moving stops up here. Let's look at the 5-minute. What's the structure on the 5-minute? Yeah, I think that's a good stop loss there. So I'll move my stop loss up here, and I'll wait with that. Okay, so just getting ready to enter this position. So I'm gonna be moving MetaTrader over to my right screen here, and I'm gonna be pressing that trade button here, which means it's gonna enter. A window is gonna pop up. You can't see it, but a window pops up for an order confirmation, and as soon as we have that tick above that low time frame breakout, I will press OK there, and then I will enter the trade. We can look at trading view while we wait for that. I'm going to just adjust this alert here as well to right above here. Then we're going to go into gold. You have quite a few questions on gold. So an important level for. Sorry.
Always.
Yeah,
gold,
as always.
Most requested asset.
Yeah, gold is definitely the most requested pair. And by the way, guys, welcome everyone who's watching this on Twitter. Welcome everyone. We see that we have a lot of new people coming in here as well. And we just want to say welcome. And if you're new to the live stream, if you haven't been here before, if this is the first time watching, welcome to the 5ers live trading room. Here we have a live stream that goes on from 8:30 GMT till 2 p.m. GMT every day from Monday, Tuesday, Wednesday, and Thursday. And we have a big team. We have about 10 people coming and going in this live stream showing the trades, trading live, breaking down their systems, what they're trading, when they're trading, risk management, all of that fun stuff. So if you're new, make sure that you do hit that subscribe and like, because this is all free. We're doing this for you guys. It's all free. All you have to do is just click that like. It's going to help us immensely. A small gesture from you means the world to us behind this product. And if you're watching on Twitter, all the action is on YouTube. On YouTube is where we have the polls. On YouTube is where we have the giveaways. So if you're watching this on Twitter, make sure you jump on to YouTube and subscribe on there as well. That's where we have all the comments and everything. Okay, so on gold here, the 3,000, this level right here, the level that I have drawn here is around 3,000, between 3,340 and 3,350. That's a very important level, I believe, for gold to reclaim if we are going to regain overall high time frame bullishness. If we go out to the daily, what we see here, I think this is it's an old chart. Let's go over to this one as well instead. Yeah, so this is the one. So as you can see right here, we have obviously the primary trend here is bullish. And for those of you who don't know what the primary trend is, the primary trend is basically the most obvious trend on the higher time frame. So if you look at the Dow theory, he talks about primary trends, secondary trends, and intermediate trends. And on the primary trends, you have the daily and the weekly or the monthly. Those are the trends that can last for months to years. And then you have the secondary trends, which is the retracements within the primary trend. Those can last for weeks to month or days. And then you have the intermediate trends, and those are the kind of like the intraday fluctuations or the low time frame trends that are within the secondary trends. So you can see here that, and this is important to know, because when I'm talking about technical analysis and I'm saying the primary trend, then this is the primary trend identified with this big green ascending trend line. That's the primary trend. And then this is a secondary trend. That's a retrace secondary trend and a secondary trend and a secondary trend. Now, what happens within these moves, those are the intermediate trends. Now, I'm, as a trader, I'm a type of trader that I always try to trade the secondary trend in the direction of the primary trend. So what I'm looking to do as a swing trader, I'm looking to buy here and sell here, buy here and sell here, and ride these secondary moves and hold the trade for a couple of weeks. And I'm never going to be shorting into a secondary trend if the primary trend is bullish. And I don't really care about the intermediate trends, because if it's one thing that I've learned in technical analysis is that the no one can manipulate the primary trend. The primary trend moves by all the available forces in the markets, be it technical or fundamentals, whatever, and no single entity can ever manipulate the primary trend in any markets, I believe. You do have a scenario with GBP USD back like many years ago where big traders and institutions actually did manipulate some big moves in GBP USD, but that doesn't really happen very often. Most of the time, the primary trend is impossible to manipulate. The secondary trends is much difficult, but the intraday fluctuations and the intraday moves are most of the time just noise, just almost like random price action where you can find patterns, but the question is there any validity in those intraday fluctuations? Because it's important to remember that even in completely random price action, even if you have a completely a process of like a random walk where every new price is completely independent of the previous price and it just moves randomly in the direction, you will also find trends in that, because you have something called the arcane or arcane law in mathematics that states that even with a random price structure, you'll find like a U-shaped curve in the numbers, which means that the extremes will be in the beginning of the sequence, at the end of the sequence, which is basically in price action translates into a trend. So that's why trend following is so important to understand, because even in completely random markets, you'll still have trends, and that's at the basis of what Charles Dow recognized in the beginning of the 1900s, I believe. Anyway, so going to gold here, what we want to do is we obviously want to see all time frames aligning with the primary trend. So we'll look at the daily. Okay, primary trend is bullish. Look at the 4-hour. Kind of bullish. Overall higher highs and higher lows. Kind of bullish. And we look at the very local structure. We're bullish. Higher highs, higher lows. Look at the 15-minute. Still bullish. Higher highs and higher lows. The 5-minute is showing signs of a breakout structure, because you have a high, a low. So this is the 5-minute structure. And then of course the 1-minute. And now we're down looking at the intraday fluctuations, which means basically means nothing, right? But what we want to see is we want to see these at least align with the overall bullish structure. So what needs to happen is for gold to reclaim this level. Then if we can reclaim this level and kind of move like this, then at the very moment when we break this high, at the very moment when we break that high, then all time frames are aligned, even the 1-second chart, right? So as soon as we break this one right here, there's nothing bearish about the gold chart at all, in my opinion. And that's what I want when I want to be buying. So again, going back to the idea of riding the secondary moves, I want to be buying here and then either selling here or selling at the high time frame resistance, which would be around this level. And this is actually the trade that I took on gold. So in the beginning of this live stream, I said that I had a trade on gold. By the way, EUR JPY is about to break out, so I'm just gonna just the alerts here.
So you're not yet for JPY.
I'm just gonna double my position when it breaks up, because then same goes for EUR JPY. If we break this like 165.910 level, then every time frame from the 1 second up to the weekly is bullish for EUR JPY. So the trade that I took here on I remove this. Okay, so the trade that I took on gold. Yeah, I gotta remove some things here. I took this trade, right? And I took it on Monday, live, for all of you. Great trade. I mean, it aligned with everything here. Very good trade. Now, what I did was I looked at the P&L of my account, and this trade that you're seeing right now is not a trade based on P&L. Okay, so we're looking at gold right now. So if you're looking for gold analysis, pay attention to what we're doing right now. So great trade, I must say. I think this was one of my best trades in a while because I had conviction and I stayed with the trade, even though we had some really strong fluctuations, like almost crazy price action down here. And then right before we hit that TP, like around 5 or something like that, I was having dinner, I believe, and I'm like, you know what? I'm looking at the P&L of my account, and I'm thinking, I want to make more money. I want to make more money on this trade so I can get back to break even, because I would be in a 1% profit on the account if it hit this level. So what I did was I increased the TP to that level. And excuse me, before going to bed, I increased, not before going to bed, but around dinner, I increased my TP to this level. And then I turned off my phone, everything, because I just wanted to have relax. I woke up the day after with stop loss being hit. And the same day, the original TP was hit. So this is why, this is the difference between trading technicals and trading your emotions. This setup right here, that's me trading my emotions. But look at the perfect test of that TP. This was literally my TP. Now that's a technical trade. This is an emotional trade based on the fact that I wanted to get back to break even. And this is the difference between systematic trading and discretionary trading. Now, you can have a systematic system and you make discretionary decisions on when to exit and enter. But this is why discretionary trading is probably one of the most difficult things you can do. And also one of the reasons why I'm now moving more into the realm of automatic algo trading, because it's profitable without even having to think about it, right? But this is a good learning experience for me and everyone watching. Price went up, took out my original TP, and then down to stop loss. And not only did it go back to original TP, it went up to the level that I thought it was going to go originally. So with that said, we are now seeing a local uptrend on gold. You could view this as perhaps a rising wedge, or I'm not sure the context here is important, right? Rising wedge often happens after an uptrend at resistance, and now we're seeing this in a downtrend. So I'm not sure how to categorize this or look at this, but I would actually view this more of a ascending trend line, with that being resistance. So this is obviously a bullish pattern, and if we can get a breakout here with some volume coming in, then I think we have a really good opportunity to go long on gold. And what I like about this is volume increased on this fake out, but then it decreased on the tests here. So chances are that on the actual breakout, if we're going to get one, then volume might actually confirm this move. And we also have a fairly clean level on the OBV. So if the OBV can break above this level and we have an increase in volume, I do think we have a fairly good trade here. And if we apply the measured rule to this ascending trend line, the target for gold would be this, which aligns with this resistance area up here. So I think that is my next trade on gold. The fact that we have inflation numbers coming out today is not really helping this trade, because maybe we get the breakout right before the numbers coming out or something like that. But yeah, this is the trade that I'm looking at on gold. I quite like that from a technical point of view.
I'm also looking at long for gold, but I wanted to go a little bit lower actually.
I'm gonna get some water. I'll be back in just a bit. We have a lot of people watching, so just because I leave, make sure you don't leave. Okay, I'll be back in just a bit.
What do you mean? You think I'm gonna just leave the audience with a chart hanging?
No, I'm talking about the audience. Just because I leave, I don't want them to be leaving.
Oh, don't worry, they're not gonna leave. They're gonna have some.
I'll see you in a bit.
Okay, guys. So I'm actually looking for the buy on gold as well. But what is not convincing for me is silver. So I look at the silver and gold for the correlation before I take my decision for either one of them. And if you look at silver, it's going to show us that we are quite in a top of the rising channel. So we have some space to go. We are talking about the outer channel. We are talking about the bottom channel. We are quite at the top already. So which is not a perfect moment for me personally to be buying. Now, if the price action is like this, I'm going to be looking for these moments to start buying certain asset and not trying to buy it till like to get the last like couple of ticks when the price is already quite high. But this is daily. Now, if we go to the 1 hour time frame, what we will see is that the price just got outside of the range. So we had the range, and with the Iranian news, we get the breakout together with gold to the downside, but silver looks quite clean compared to gold within the current situation, because we see that the price has been consolidating for a while now, since yesterday, after the break of the previous range, and now we are out. The price, I'm assuming, is going to still go and hit the point of control of this of the previous range. We see that the price couldn't really go to the upside, so we didn't have quite a big recovery. Now, if the price would reach this, I would still assume that we already tested this level and the price will simply continue to the upside. But because we, first of all, we didn't test this level properly, and we have some space until the actual volume zone, the price didn't even get there. I'm assuming that we're going to get, by the price action, the reversal back to the downside again, and at least test 36,120. If the price gets to 36,120, I'm still might look for confirmations for a buy, although it might be very risky. So I'm still thinking if I'm going to give it a shot or not. But what I'm more convinced, if the price is going to break to the downside and break the point of control on 36,120, then at the value area low of this whole move to the upside, so the volume that you see on the left side, not this volume, but on the left side, is basically, well, this one kind of as well, represents how the volume was distributed from the move from the bottom till the top of this move. So all this like all this period of time when the price was rising, okay, so we see that we have the high volume node here. If we break it, the next high volume node is only at 34,700 level. And we know that by the market auction, market moves from volume to volume. So because the volume is essentially the money for the market, it's like a fuel for the market. So if we break this, and I'm going to get a retest, I'm going to sell it here, and I'm going to wait for the price to reach 34,700 level. So I'm more convinced on the sell of on silver, maybe during today's CPI, if the CPI breaks through the zone and closes with a body of the candle lower than 36,120, I'm going to be looking for a sell. And now, since I'm actually looking for a sell for silver, I'm not convinced on the bullish bias for gold for a current moment bin at least. Now, what we see is this channel, and this is a trade that yesterday hit my stop loss. You know, it was going good, and then I didn't move my stop loss to break even, and it completely kicked me out on the stop loss, but it is what it is. And what I'm looking at here is that if the price gets back to the bottom of the channel and to the high volume node here, which is at the same time the point of control of this range, at the same time the point of control of the week, the developing point of control of the week is here as well. And if we go left, we will see that it's been already quite an important zone of volume here. So we see that for a long period of time, this high volume node doesn't go away anywhere. So it's been there since the 21st of May, which is the last week of May. It's been already like, what is it today even? Like 11th, 10th. So it's been there for almost 3 weeks so far. And if the price gets back to the same high volume node, I might take a buy. Now, this would be perfect if at the same time silver is somewhere where it can get a pullback, and then I'm going to take a trade. However, they're going to exclude each other for me if the price of gold is here and it's bullish, and at the same time the price of silver broke the point of control. If this happens, I'm not going to take neither of those trades, because they are going to be excluding one each other for me. Now, it's not that they are 100% correlated, but they are correlated in a direction, because they are both metals. They are both like the people leverage them when things go down, right, in the world, in the economy. So they are not 100% correlated within the like precise time when they move, but in the direction, yes. So if one is going to be bearish, another one is going to be bullish, I am not taking those trades.
I just want
And
to say that I'm entering your JPY. Sorry for interrupting you, but it really looks like your JPY is going to be breaking out any moment, and I do have that did break out on Wanda, so I do have the alerts going off on Wanda, the level that I wanted. So I did enter. Okay, sorry. Go ahead.
No worries. COMEX chart is free or delayed. It's delayed, 15 minutes, but the data you buy is like $5 or $6, I think. So I have it bought and included in my subscription. But normally, if you have the free, it's delayed. VRVP is set at delta or up or down. It's set for total, Maria. It's actually every single volume from me on TradingView is set to total. And the reason for this is that TradingView doesn't have the proper calculation of the volume. So delta is going to be visualized incorrectly. The same with up and down is going to be visualized incorrectly. So I use total both for FRVP and VRVP and PVPs. Everything is total volume. I didn't find any use in dividing it by sells delta, like a difference between sellers and buyers doesn't really work. Henry, saying the price didn't touch that line on silver, could that be an inducement of the buyers to get trapped? Yes, and that's what I'm expecting, actually. To be quite honest with you, I'm more bearish for silver than I'm bullish. And that's why I'm not yet convinced for gold to enter it again for a buy right now, at least. So I do think that we're going to get back here again, and I'm not really 100% sure that it's going to hold. So I'm going to see the price action when the price gets to 36,120. But we see that if it wouldn't be to drop, if the price wouldn't want to get back there, then what would happen by the price action, at least what I've seen so far for years, is that if the price doesn't touch the point of control and it touches the high volume node, which is possible, but then it immediately goes back up. And in this case, if the price would do this and close above this volume, I would take immediate buy on silver for the continuation. But it didn't. What we see that the silver is struggling. It's here hanging in between the one volume and another. So I'm assuming that sellers are pressing, like this wall of the new sell limits that was placed here is pressing on silver and is going to return it to their 36,120. So I am more for this scenario, for the second one, than for this one. Did I miss any questions in the chat? Let me see.
By the way, I think that's. I'm always very impressed with your analysis. I think that's really good analysis. I like how you're looking at volume, and I like how you're combining, all of the different types of analysis. All right, your JPY breaking out. Kinda about the breakout.
Let me switch to your
about
chart.
the breakout. But yeah, looking at the 1 minute here. Let's see what we get. I'm going to start tightening up the stop losses if we do get this breakout. And of course, as soon as we talk about the breakout and we open up the chart, then we see a not so much of a breakout. But okay, let's see what we get here. Interesting to see. I would love to have a breakout before the news comes out later today.
I'm still in a buy for USD JPY. Well, I'm in a sell for 6J, but technically in a buy for USD JPY already. So let's see if it's going to continue to go up. That's a great question. Russell is asking, can you trade the difference between gold and silver? Yeah, you can trade a ratio. Like you can trade a ratio of almost anything pretty much. Depends on the platform you use, of course, but you can pretty much trade the ratio between both of those. Long term, I'm actually very, very bullish for silver. Like if you take a range for a year, 2 years, 3 years of a Trump's presidency, I'm really bullish on silver. for long term. Like, I think it's a great long term investment now, better than a gold one. So,
okay, what are we doing? Okay, Euro JPY. Euro JPY, I want to see that breakout. I'm going to be increasing my stop loss here for the first position. I'm gonna let that one be for a while. Doesn't look lower time frames. Okay, guys, what are you? Let me know in the comments if you're looking at anything specific. If there's any specific pairs that you're trading, or if you want us to look at something else. Hey guys, just joined. We're looking for a long position on gold. Okay, let's. So the idea that I have on gold is not. It's not a. I can't really say that we're looking for a long position yet, but if we do see a breakout here, then yeah, I would think that a long position is definitely possible. But then you have to ask yourself, do you want to trade just a few hours before the CPI that comes out in 2.5 hours? Okay, so finally looks like Euro JPY, like Euro JPY is just on that edge of breaking out. It feels like really trying to break out. It feels like the market wants to break out here. See.
I am adding to my position for 6J for USD JPY.
You're looking for what? On USD JPY?
Yeah, I'm adding to the position right now.
Can you show us the chart on that one?
Yeah. 1 second. Like some people asking about, you guys asking about euro and pound, and I think it's like it looks so bad actually. Wait, I'm gonna still go to euro and pound afterwards. But for the 6J, what we see is that this is essentially, for those of you who don't know, USD JPY is 100% negative correlated to 6J, which is futures on pound on yen. What we see here is that we had been in a quite downtrend basically for a while, and what is important is that we broke this zone here, so the price has been holding it, and we see that the price was trying to break, like trying to reject it many times. So we had one time buyers were trying to push the price higher, second time the buyers were trying to push higher, and eventually they failed, so the price went down. And look at this price action. The price went down and accumulated like more volume before dropping even further. So I think eventually the sellers won the battle here on the USD JPY 166J. And right now, what is interesting for me, and the reason I took a short, is because we have quite the big volumes above the price. So this is the monthly point of control. So for the past 10 days, a majority of the volume was traded here. And I like how the price, first time we had weeks, this time we had weeks. And this time we actually have the choppy market, which is usually the accumulation of the volume before the drop, so before the breakout. So I like the price behavior now. We also have the point of control of the current week is here. So this is the gray zone that you see is between those two volumes. Quite an important volume for me. And if I hide it, then you will see that we have a, okay, let me just make this one brighter. Perhaps it's going to be more visible actually. Then here we go. So we have quite an important volume zone here, the volume node. We tested this one. So this one already got tested, basically. We tested that one because the price has been consolidated here. And this one is now the one that was holding the price. So for the 6J, I'm waiting for the price to go lower. And I am aiming for somewhere here, which is quite a good trade if it's going to work out, because I'm waiting for 67,870. And I took a trade of 6J for 69,760. Wait a second. 69, seriously? $735? How was it? Oh, yeah, that's a different contract. Okay. So that's a September contract for me. So I took a trade right here, which is good. And my stop loss is here. And if the price is going to reach my target, is going to be 1 to 4, and that's without adding to the position. So if I'm going to get to the position, I'm expecting to get 1 to 8, 1 to 10, preferably. Well, it depends how the price is going to go. So I added a very small position now here. And for the USD JPY, accordingly, I'm waiting for the price to go up. Looks also perfectly similar thing. Sellers were trying to push the price lower several times. We see the volume accumulation, the breakout, holding for the first time above these levels. So we see how the price is actually holding here. We also have the point of control of the months right here, point of control of the week right here. So similar volume zone for USD JPY as for the 6J. And I'm expecting also the price to go all the way here. Wait, volumes is going to load right here. So that's my target for actually USD JPY. And this is 147,940.
Nice. Okay, so that aligns with my like my first target of the overall swing trade. But I think I think that's a great trade. I think that's a really good trade. And if I would have a tighter stop loss, that would probably be my final target for that move as well.
How is your EUR JPY going?
Mine?
Yeah.
Well, not much changed. Not much happening. Just right at that resistance. So yeah, not much happening there. Hopefully it's gonna do something. Man, sometimes I feel like I should focus more on what I'm talking about when I'm talking, because I sound completely. Can you say the word retarded? You can't say that on a live stream. I think that's not politically correct. But I did say that. So and that's what I feel like. That's what I feel like when when I think about talk about things that I'm not paying attention to, just like I am right now. Euro JPY. I'm talking about Euro JPY, but then I'm looking at something else, and it becomes just a very awkward situation. Like this whole situation right now. I can look at you in the station and you're like, what is this guy talking about? Yeah, nobody knows. Nobody knows, but it's yeah, Henry, let's cancel don't cancel me. I'm not gonna say I'm uncancelable, because I'm not. Nobody is, but I am. I would say I am.
I would say you are.
I'm not. I am uncancelable, because you know what? If okay, that is not a discussion for this live stream. But what we're seeing here on Euro JPY, I'm gonna change over if that's okay. What we see here on the Euro JPY on the 15-minute is we've broken above the level, we have retested the level, and then on the 1 minute, we're really just pushing and pushing and pushing towards that resistance. And this could go either way. We could have like a strong move to the upside. Like we can have a really strong move to the upside, explosive breakout, or because there's a squeeze here, right? That there's a lot of people looking to buy. And the question is, where are those stop losses? Like, where are those stop losses? Maybe we have a lot of highly leveraged players. I'm not sure how how accurate this type of thinking is in the forex market, but in the crypto market, it's very much real, because if you look at an altcoin, or maybe even Bitcoin, maybe not so much now, but I remember back in 2017 or 18, it was very much real on Bitcoin, where you would have those long and short squeezes where you would have like Bitcoin trading very heavily and it's just coming up into a resistance, and a lot of people are looking for that breakout, and they put their stop losses like, around this area, and they have like, 1,000 times leverage, and they're going in and they're risking like an enormous amount of their capital. And you see on the futures platforms that the longs are just piling up, right? And you get a squeeze. So there's so much, there's so many stop losses here, and there's so many orders here that when those are hit, it's just going to be a liquidation cascade, and everyone's just going to get liquidated. It's a big move to the downside, and then you have stop losses down here. There's more liquidations, and the price just goes straight down. I'm not sure if it's the same. It's probably the same principle, but I don't think it's at the same level in the forex market, because us as traders, I mean, me, Anastasiia, and every one of you watching, our trades have zero impact on the market. I feel like zero impact on the market. The only ones really impacting the market is, banks, especially in the currency markets, with the exchange rates and everything. The institutions of bank, those are the people that can really start moving the markets. So I'm not really sure if it's the same applied here, but you can really see that when you have a pattern like this, when price is just consolidating within a super clear range, and by the way, now it's breaking out, and you're mostly going to see explosive moves when it breaks, but not so much to the upside, okay? To the downside, it's prices usually, that's saying that prices go up, that the staircase up and the elevator down, because when it does break down, it usually does so on heavy momentum and heavy volume. Speaking of volume, let's put on some volumes on here. See if we can find anything. So we do have OBV showing a similar pattern to price here, so can't really make much out of this, but the OBV is breaking out. Obviously, it's based on tick volume, so it's going to break out. But you see here, during the duration of this pattern, you have a declining volume. So even though you have bullish price action, volume is declining. So for a real breakout to occur here, we need to see a volume spike, preferably a volume spike that goes above that one.
Yeah. Maria, I'm on short on 6J. And long on DAX still.
Daniel says there's a breakout on EUR/JPY. Not really. I wouldn't really say that this is a breakout. And we're watching the 1 minute here. So a 1 minute breakout doesn't mean anything. We need to. I'd say my minimum preferred time frame for a confirmed breakout is a 15-minute open and close above the level, and at least a 1 hour close above. And even with a 1 hour close above, it can easily be a fake out. And if you look at the 1 hour here, it's close, but. And I mean, if it's going to close like this in 40 minutes, then we have clear indecision. We don't want to see like a doji or clear indecision candle at the level. I love how everyone's like, gold, just do gold. Maybe we should just do gold. Maybe we should just do like the 5ers gold live trading stream. Another one, please look at gold. Oh, please describe gold. You want gold? Yeah, I think they want to look at gold. Okay, so again, let's look at gold. Okay, so I'm looking for trade on gold. And I want to see gold reclaim the like 3,350 area. If we get a break about 3,350 on gold, then I would want to go long. Do I want to long here? I would only long here in anticipation on. Yeah, they're looking for gold. I want to see, like, if I'm gonna get long here, that would be in anticipation of a breakout, which has like a super low win rate. Breakout trading has a low win rate, but then if you're buying in anticipation of a breakout, it's going to be even lower. Do we have any perhaps any confirmations here with indicators?
I'm looking for it's actually now on the point of control for me, so it could go up from the current moment, but I'm not really taking the trade for a current moment because the price had already been there and it came back there. I don't like how it's behaving. And now I'm waiting for the futures. It's a 33.45 level, so it's pretty much the bottom of the channel, which for you looks different.
Yeah, you know, it's a bit embarrassing to say because I'm supposed to know this, but I don't have a good understanding of the difference between a regular divergence and a hidden divergence, because like if you look at a hidden divergence, if price is in an uptrend, so okay, I'm gonna ask the chat here. You have to help me out here. Okay, so this is price. Okay, this is price right here. Okay, so that's price. You can all agree that that's an uptrend. Okay, now this is at the bottom. This is RSI. Okay, so if the RSI, so this is a higher low. Okay, so what is this? Could you let me know in the comments, what do you call this? What type of divergence is this? RSI is giving you a lower low.
You want me to answer or you want the chat to answer?
I want the chat. So that's RSI, lower low, while price creates higher lows. Now, what type of divergence is this? Maria says that's a bearish divergence. Probably taking a while for them to answer because they're taking a screenshot and then putting it in the chat GPT. Absorption. This is an interesting answer though. Okay, so everyone agrees that this is a okay. Now he's saying that this is not a divergence.
It is a divergence, Daniel.
It is a divergence. It is a divergence. You fail. So everyone's saying that it's a bit bearish divergence. Some saying that bullish. That divergence bearish. Do not trade this divergence. No, do not trade this. This is line. It's not even hidden. And some people saying hidden. Now, UK swing trade is saying hidden. Now, this is apparently a hidden divergence. Okay. This is a hidden divergence, but honestly, I have a difference. That's a good, a camel, could be a camel. I don't know. Nicholas has a good idea what this might be. Might be a camel. It might be a camel. If I would be drawing a camel, it would probably look like this. So this is a hidden divergence because, and a hidden divergence is supposed to appear inside a trend. A hidden divergence is not supposed to appear at resistance. So I'm thinking that probably if the RSI stops here and price and price is stopping here, then perhaps that would then be a bearish divergence. Because the idea with a hidden divergence is that you have a retrace in price, and even though that the RSI or whatever indicator you're looking at came lower, so the momentum indicator came down lower, but price recovered anyway. So even though the momentum had a big dip to the downside, price was strong enough to recover that move. But then I'm thinking like, okay, well, what if this happens at resistance? And if it happens at resistance and price is clearly, having trouble reaching above that resistance, then surely that must be a bearish divergence. It's things like that. I don't understand it. I really don't understand the clear difference between a bullish divergence and the hidden. And I think like Trader Joe says here, the difference here is that the bulls are absorbing that, anyway. There's a weakness in momentum, and then the bulls are absorbing it. But then I'm thinking, okay, so it can only happen in an uptrend or in a downtrend. It can only happen in the middle of a trend, right? You can't have a hidden divergence like on support or at resistance, which also then like, yeah. And yeah, so everyone says like hidden bullet divergence is confirmation. Yeah, I'm 100%, 100%. I do understand that. I think everyone understands that. Everyone can look at like what's the bearish divergence and what's the hidden divergence. But then what I'm thinking is like, why? What's the logic? What's the logic behind it? Because for me, it's important not only to understand, the name of the pattern, but also the idea behind it. Like what's the the logic behind it. So maybe it's the fact that the indicator is creating higher highs. Mike says refer to ICT. He got a better explanation for that. I'm sure he has a great explanation for that. Let's not go into that. You get absorption without a hidden. Yeah, okay. But that's something that I need to study more. The difference between the hidden divergence.
Void said, I don't ask. Void said in the chat, I don't ask ChatGPT, ask LJ. He's a more accurate, advanced AI in the market.
Yeah, LJ does have a lot of knowledge, and he is surely like our Australian AI. Australian intelligence. Nice. AI. Aussie intelligence. That's perfect. Where is he? He's supposed to come in here in any minutes. Oh, there we go. It's Mike. We got our. Is that our PA? Is that our Polish and PI, Polish intelligence, or is it BI, British intelligence, or is it AI, Australian intelligence?
EI, private investigator. BI, bad investigator. Bad intelligence. Probably bad intelligence. I think that's probably. I'm like the yin to the yang for LJ. You see, so LJ.
And everyone, if you want to have a lesson in how you completely destroy a good beginning of a joke, there you go. There you go.
No. This is how you make a joke. This is how you make a joke. This is how. This is how you then take things to the next level and improve things. Anyway, I'm going to be back in a minute.
What? Okay. As I said, that's the Polish intelligence in him. If anyone any Poles watching here, I do have a lot of Polish friends. They're amazing. They're amazing. So nothing against you. The Mike's not even Polish.
We'll slag him off when he's gone, guys. Don't worry. We'll slag him off.
Yeah. He's actually fake. He only lives there, but it's not born there. He's an immigrant, Is it Polish? Is it a Polish immigrant? No, it's a British immigrant.
I am from Polish aristocracy. I'll have you.
Okay, it doesn't help. Doesn't help that he's gonna goes back in and out like that. Okay. Sounds like we're talking about Secret Service. No, we're talking about general intelligence. Magic Mike. Yeah, we got Magic Mike in the background. Algerian intelligent. Is that Void? Are you from Algeria? Why would you? Yeah, I guess. Why would you write that anyway? I guess you are. EU was a buy. Now it's a sell. Thank you. Let's look at EU. Let's look at the EU. EU was a buy. It is now a sell. I love that. I love that. That's that's gonna be like my market analysis. Like, can you do? Can you look at gold? Yeah, it was a buy, now it's a sell.
Actually, gold right now is a sell for me.
The sell?
Yep, look at this.
That is not, can't be true. Okay, it's breaking down. Yeah.
Broke the point of control. Yep, it just broke the point of control of the week. Closed below for the first time. We see the previous candles didn't go there, so the price action also shows the bearish momentum. We have the shift between the point of control of the week and the price as well, so I'm expecting the price to go here, and I'm gonna take the trade right now.
Nice. Euro JPY broke out, so we have a confirmed breakout on Euro JPY. I know Mike is in because he has DM'd me. Thank you for the signal. I will transfer over the funds at the end of the day. You better do that, Mike. Otherwise, I will. I will tell the team that he is, trading based on signals, group trading, signal trading, not allowed. Not allowed at the 5ers. What are these lines here? Why do we have a line? Oh, that's on the volume, right?
Okay, nice.
All right, so we have a good breakout here on Euro JPY. About to make a shit ton of money. Demo money. It's on the valuation accounts. It's actually not real money, but it is money when I look at the P&L. Because in MetaTrader, I can see a difference.
Okay, so I'm in 3 trades right now. It's DAX for a buy still. It's 6J for a sell, and it's gold for a sell.
Okay, guys, I got to jump up. I got a meeting coming up. Can you get to speed things up, Mike? I know, I knew like the way it could be like, boom. Let's do this. Okay, everyone. Thank you for joining. Thank you everyone for joining here today. We got 3 seconds then. We got ABL joining us in just a second. Take care, everyone. What is this about my hairline? I have a beautiful hairline. I can't believe I'm getting comments on my hairline. That is absolutely ridiculous.
There we go.
Hello, hello.
That's how it works.
How are we doing?
We can't hear him. Anastasiia dropped off before we could say thank you. Oh, he's back again. Maybe.
I'm back.
That's the hairline. That's the hairline.
Sorry, mine's worse.
LJ, how old are you?
Hairlines. You never ask a man that question.
Of course, gonna ask a man. Who cares how old a man is? How old are you? Did you say 31?
Yeah, 31. Yeah.
Shit. Okay. I am.
How old are you?
How old I am?
Yeah.
25.
You know what? I am embarrassed to say, but I always had to think about how old I am. I think I'm fairly certain that I'm 34 or 33.
Jonathan's lost track of his age.
Yeah. let me actually have to look that up.
It's all the CMT.
Gotta look it up.
Google my own name.
Harsh. Jonathan, the exam was too harsh.
Yeah, I'm 34.
Yeah,
God damn it.
It's destroyed his brain.
You had to actually check it.
How old are you, Mike?
Man. You know how old I am. I'm ancient. I'm older than all of you.
Do you think I put that, do you think I memorized how old people are? I didn't even know how old my mother is.
You don't know how old your
mum is? How old are you?
You know when her birthday is? I'm 40. I'm 40. I'm going to be 41 this year.
Okay, I got to do something about my hairline. Do you think that's
When are you going to do the proper beard?
Off to Turkey, mate.
When are you going to do the proper beard? That's what I wanted to jump to. Yeah.
So
proper beard. Bring it out.
Yeah.
It's a known fact that for a male trader, you've got to have a beard to be any good as a trader. Not relevant to women, of course, Anastasiia. Just making that clear. All right. The less beard, the better for women traders. For men traders, the more beard, the better.
So So if anyone's watching here, you're in the comments and you have like expertise in hair, then hit me up. My email is jonatan.r@the5ers.com. Maybe you own a clinic, maybe you have like, and what we can do is you fix my hair and I will give you an evaluation account. How about that? Or two, you know? Can definitely make that happen.
Just go to Turkey. You gotta take care of it.
I gotta book that. Book
Yeah,
that
everyone
flight.
goes to Turkey. Like they did all the teeth and everything. Like, oh man, should probably maybe I should do that. I have good teeth though. I actually know, but I like them. I like them.
Trend line on your hairline.
I am fairly conscious of my hairline though, because I've been getting comments in the like I had no idea before the comments in the live stream.
Until you
When
started.
was the comments in the live stream?
Tell my hairline, like who do we need to ban? Like who do we need to give a live ban for that? Who was
People
it? Let's go
commenting about
back.
your hairline. Damn, that's harsh. That's harsh, guys.
Rough.
I didn't even know. Like look at this guy. He looks very
Shubham.
handsome and perfect, and he's like, look at it. You know what? Like
That's below the belt, man. That's below the belt, which you're not wearing in your picture. So really, you shouldn't be making those kind of comments. You know, it's harsh stuff.
this. Well, let's bring him on. Let's compare hairlines. Let's do technical analysis on our hairlines.
In fairness, his hairline looks pretty strong in that photo.
He does look fairly good.
Yeah. It's all right.
See, we can
Look,
look at,
Jonathan, mine is like, you can see mine is like going further and further back on the side. So it's all right.
Yeah.
You know,
You definitely have some alpha decay there.
You know, it's fallen away. It's fallen away, but it's all right.
Yeah.
It's you know, it's aging. Was it aging gracefully or aging terribly? So you know, you can do one or the other. I do terribly. Got the Quasimodo hairline.
I got like an inverse head and shoulders. No, it's like a head and shoulders. Look at that. That's it is. Look like that. And then here I have like I should get one of those like completely straight haircuts, and I'm gonna like see if I can get a little break down here and do like a little cut. Nice.
You know what?
Like,
everyone's saying go to Turkey, right? But the number of times I've seen a photo of a bunch of guys on a Ryanair flight going back to the UK after a trip to Turkey, and they are all just really badly patchy haired. It's not good. It's not a good look.
Okay, well,
when you
what if we bring Turkey here though? Like, what if you live in Turkey and you know this, then why don't we fly you over here? You know, like why do I have to fly to Turkey? Why don't we fly them over here? It's cheaper, but I got money. You know, I got money. I can pay. Not too much. Not too much. I'm getting a lot of deals in my my email is just gonna be. Yeah. Okay, let's look at the views. How many people like this type of conversation? Apparently, not many people. Not many. Okay, so I'm gonna leave, and we will leave the live trading to LJ and Mike.
Thank you.
The AI, the Aussie Australian.
The AI and the BI.
The Aussie intelligence AI.
That's good. That's good.
Oh dear.
UJ breaking out. Okay, guys. See you in a bit.
Thank you, guys. See you later.
See you.
Peace.
Yeah. Take care.
Oh, he's going. Okay. All right. There we go.
Peace.
How you doing, mate? You good?
Yeah, doing all right. Still not super liking the charts today. Just like yesterday. Monday was really good. Today feels
a little bit
less
funky, aren't they?
Yeah, just less clean, you know.
Yeah, they're a little bit funky.
Told you LJ is drinking.
What?
Hey?
I'm saying I told you LJ is still drinking. We had the conversation about it with Jonathan in the beginning of the stream. I don't know if you heard
You know
it.
what?
What's this?
LJ's not drinking. Only thing LJ's drinking is Monster. That is what LJ's on. LJ's on his Monster. That's how he keeps going with no sleep.
Caffeine induced. Yeah.
Caffeine powered.
Fuel for this.
Exactly. Fuel for the markets. Fuel for the markets.
Just needed to make this comment.
Thank you. Thank you, Anastasiia.
Let's see you again.
Anastasia's taking inspiration from Jonathan now. With jumping in with random comments. I'm worried about you, Anastasiia. So gold. I saw the guys were talking about gold. Gold does look nice for sells. Ideally, I'd want to see it coming back in here to retest this 15-minute engulfing candle. It has got other levels to come back for, but there's still some room, I think, for more sells. We've still got this area here, which was the beginning of it was actually the beginning of the month, as well as week, 4 day, 3 day, 2 day, 1 day. So it's a very, very big level to come for. So for me, 3289 is a key area to keep in the back of our minds. But what are you looking at, LJ? You seeing? I mean, we were just saying that the markets aren't particularly looking overly wonderful. What's, if anything, has taken your eye?
I mean, gold, I can still see like scope up to that 370 kind of level from here. Question is where, like, do we, I would have liked to see it like charge on a bit. We've obviously pulled back the past little while. Around here would be your support, next support around 33.25. But to be honest, I'm not too convinced either way. Same thing, I think we were talking about earlier, long dollar yen. I'm still seeing that at the minute, but similarly, I would have liked to see things kick on just a little more than what we have. So yeah, I'm starting to get a little bit hesitant pre-CPI. It's going to be hard to say what we get from CPI. We've actually got a lot of the data inclusive of the tariffs now. So question being whether people are expecting that. There seems to be a slight consensus to see some of that come through, but I'm not 100% sure as well that we will see much of a shift in CPI to the upside.
On the dollar, you think?
Yeah, as far as the actual CPI number, which means hence dollar could end up just coming off.
I think dollar does look like it's coming off.
Yeah, oddly with the pre-price action, pre-positioning seems to be communicating that as well.
Leading up to it, if we can see, we've tried to come and take these areas which we've failed to come and take. We may see the CPI news acts as a catalyst for some of these to be taken, but I just think we're, at the very least, we're coming down to retest these lows that were down here. That's my instincts telling me more than anything else. When I look at that chart, it just looks rather bearish. The only thing is whether or not, I mean, we've got 15 minutes left. One thing that's curious is that we've got this engulfing from this morning that hasn't been broken, and you see how we've retested the wick of it, and now we're pushing back up. So be curious to see what happens in the next 15 minutes on the Dixie. If that pushes up significantly, it could be a sign that actually there'll be some strength in the dollar for the time being before any furthers. So
yeah, like we were saying the other day, I would have liked to see dollar yen, the dollar index come up a bit further, up into that 99.40, that kind of area, and get through there potentially. But we haven't seen that at all. Hence, I'm a bit hesitant now, just pre-CPI, because we do seem to be just lagging, falling off again, going back to the old, dollar selling. So I'm considering actually flipping short on dollar yen now at this point. Currently sitting in Aussie dollar long at the minute. I did pick up some longs on the euro earlier. Tried to short initially for another rundown, but we just weren't getting it. Got stopped out, so just flipped the trade, went back the other way. So I think we could potentially see a bit of a turnaround. I mean, euro's still sitting up here, despite dollar yen having retraced a little bit in the past sort of hour, right? And when I just look at the euro technically as a whole, zoom out a bit, it definitely looks as though we want to have another run at that 115 kind of thing. That's kind of what I'm seeing at the minute.
Yeah, I'm just looking at gold. Sorry, not gold. USD JPY, and I can see plenty of levels left behind from the moves up. No real kind of clear indication of price happy to leave those levels. Nothing of major influence. You can see here, for example, be there.
I may even consider shorting dollar yen from here, to be honest.
I'd like to see it come up and retest this area, if I'm honest.
Yeah, I would as well, but that's what I mean. Like the fact that we're just not getting there. We sort of seem to have every reason to get up there, structure and all, but we just haven't.
I mean, we've not broken this high, this previous high here either. So it does look like we've got quite a bit of resistance stopping us from going higher.
Yeah, because we've had bonds come down today, so therefore yield up as well. And as far as the differentials, like that should have supported the dollar a bit more than what it has today. And we're just not seeing that. Often when you have sort of every reason for a price to run one way and it's not doing that, you know, market is telling you something. So yeah, I would definitely gauge a lot of pre-positioning for the CPI later. My expectation was that I have a slight lean that it will actually come in a touch softer. Obviously very hardcore at the minute with the tariff flows now coming in, but per what we've seen with some of the other, I guess, cues, they haven't exactly seemed wild. So it would not surprise me basically if it does lean on the slightly weaker side, or basically in line.
Thing is that, yeah, there's nothing of great significance actually holding us up. I'm trying to see where is the kind of the resistance forming. What is it that's forming from exactly? And like if you look at the 11 hour, for example, the 11 hour formed this really strong bullish candle. Granted, it's left this inside bar down here, so that means that this level is going to be quite significant for price to want to come and test. But I actually think we might have more of a run up. Just looking at this, just from a technical perspective.
Yeah, I know, and that's what I've been looking at as well. Like, but I would have liked to see that actually push on. Because I mean, we've seen the strength in the other yen crosses, you know, so therefore yen weakness, right? Obviously, the dollar has that different component from the dollar side of the story. Hence, you're seeing the disproportionate slight weakness in dollar yen versus the other yen crosses at the minute. And so, yeah, I do have a propensity to sell dollar yen on rallies. I would like to have gone, would like to sell from a higher stage if possible. Picked up, you know, flipped and went long on Monday because we had a nice structure built out there. But yeah, I just haven't seen this really punch on.
It's yeah, it's a hard one to call actually. It's kind of just, it's reached this kind of moment of indecision almost, you know. I mean, you can look at that on the 22 days, you can see it's just been contracting down. And on the weekly, last week we closed. Interestingly, last week we did close as an inside bar and we've already taken that high. But we still have last month as an inside bar. So again, we're just consolidating down. It's yeah, I don't know. I think it feels as though right now, I know we've been saying this for a few days, but it feels as though there's a lot of indecision in the market about which way to hold. Entrepreneur, if you spam the chat, we will simply kick you out. All right. So spam the chat asking for analysis. That's fine, but there's a way to ask, and just ask once, and we will get to you. All right, we will get to you. Okay.
So yeah, and it's similar story with euro dollar. I was looking for downside on euro dollar, but we're just not getting it. Now the daily structure is forming up to look fairly bullish for a bit more of an upside kind of a run. So kind of seeing things flip.
Yeah, gold.
We can do odd yen shortly as well.
Slowly forming bullish momentum with this nice engulfing to the downside on the 5 minute, but again leaving major liquidity on either side of it. So again, not ideal, I would say. If it can't break this low as well, it might do it now. If it does, then that's okay. So sellers are in. We'll see how long for, because that move that we're making at the moment is still leaving this trail as well. So just got to be
we do have another piece as well. Federal Appeals Court just ruled that United States can do the tariffs.
Oh.
Yeah, so that's been sorted out now.
Okay.
So I mean, on that measure, that we haven't seen much reaction from it here. I feel like people kind of expected that, to be honest. But that per the whole Trump tariff trade, it's always been it's basically euro dollar up, dollar yen down.
Yeah.
From that perspective, so
anyone that's looking at sells on gold,
it's kind of bleeding out. Hey,
it is, but I would just be really careful with this cluster of liquidity down here. Up here, from this engulfing 15 minute. At the moment, it's not looking too bad. It's forming a downward move. I would just be cautious. This could still be something that wants to take, or it will come back for it later. But I'm not seeing any major significant candlestick structure that's suggesting that it's going to be left for very long. At least not for the moment.
I think we're going for 33.25 now. We're just wilting.
I'm trying to see what can I see for us to target. We've got this down here. We've got this here. So there are targets further down that price is possibly going to want to hunt. Random question here from Dinesh. Difference between options, futures, and forex. I think you mean CFDs. Is that what you mean, Dinesh? I'm assuming so.
Well, forex is just obviously the currency market. So you're just trading, one currency of a certain nation compared to another, and the relative, swap rate that people are agreeing to swap that for. Futures are going to be similar. Futures you can trade, most markets on, whether it can be cattle, wheat, you can have commodities like gold, can be iron ore, all that kind of stuff on futures markets. Typically, those places, they go through an actual exchange, and typically people are going to use that to hedge out future price, right? So forward price movement of a certain asset, typically used a lot by like commercials, that kind of thing. Say if you got to buy a bunch of grain or corn or something for cattle feed, then you want to kind of lock in the prices so that doesn't flux. Or say you have corn that is going to come to yield at a certain point down the line, you want to lock in the price where it is now, so you can trade the financial assets to assure that, say if corn dips a heap, you can essentially short it where it is, and knowing that you're getting locked in at the certain price where you are now, then allows you to calculate all of your finances for the business, and that kind of thing. Options are basically where you can take a position on something, right? And they're all weighted and priced out based on, say you take a currency, and say we're looking at the euro right now is at 114.38. You can buy an option for, say you expect euro dollar to go higher, and say you want to see it at 115. There's a degree of distance between where we are now, 114.38, and 115, right? So you can buy an option that will be cheaper than buying at the market, because it's not 100% certain that the price will reach 115. Then as the price approaches 115, your option becomes more and more in value, and then you can sell the option once it reaches, whatever value you want. Say it runs through 116, it's going to be worth a lot of money. Basically, it's giving you the choice to purchase the asset at 115, right? But therefore, you're not paying the full dollar amount, and typically that dollar amount will then be capped, so it locks you. So in case, say, euro doesn't go to 115, so it goes back to 113. Instead of copying the entire loss of buying at spot, you'll be locked in for whatever you paid on the option. And then so it's a way to limit your losses, but say when it does run right up, you get an asymmetric profit on the upside of the option versus what you paid, which is you can view it almost like a deposit on the option. And then it's a good way to hedge out spot price, for instance, as well. So.
Sorry, just taking over a message. How does synthetics differ, like the volatility boom and crash, etc.? Are they good options to trade if one wants to get away from the news? Not sure I quite follow the question.
So, yeah, synthetics are just going to be any kind of derivative asset, right? So that can be your futures or options or anything else. It's basically just a derivative of the underlying, typically like the spot market or something, that you can trade as a vehicle to still get exposure to the same underlying asset, but buying it in a different manner. Often, sometimes that can, especially if you're a retail trader, brokers often offer certain synthetics just so it's at a cheaper sort of entry cost per the kind of bankroll that a retail trader will have when they don't necessarily have the same access to certain markets that a large institution will have. But yeah, basically at the same time, trading options, just like I was saying, can be really good. Say for right now, if you were expecting euro dollar to dip from here, hypothetically, it's going to 113. And you want to hedge that out in case it doesn't and we go to 115. You could buy a slightly out of the money option at 114.80, 114.90, 115. You determine how much, if we approach that level, how much it will run further or not. You have to then assess the cost of what you're paying for the option. Because obviously over time, as people see it as more obvious as a potential risk or other direction for the market, all those options will get bought up. And then that increases the price of the option. If you go learn about it, you'll learn through all your Greeks, your beta, theta, delta, gamma, etc., and that all makes up the pricing of the option, basically. And then there's multiple ways you can play it through, like just volatility, and you get time decay and all these kinds of things. You can build a lot of really complex strategies for your larger portfolio if you wish. So, but yeah, definitely a good way to use as like a protective hedge type measure for a portfolio. Same thing with stocks, right? If you're expecting potentially a downside dip in stocks because of, say, I don't know, Trump popping off with the tariffs or something, but you don't want to sell, you don't want to liquidate the stocks you're holding. That might be because you bought in a good price, you're waiting for dividends, You just don't want to take the tax hit by liquidating the positions. In order to protect your portfolio, you can, for that small sort of cost of the option, buy downside protection by that manner. And then if the market does fall, you'll be protected because your stocks will go down, but the price of the option, the value, will go up and then counteract that drop.
I am sorry, slightly distracted because I'm trying to figure out. So I've had actually a really good day trading. Actually, just grabbing little positions here and there. I've made myself what's that, 0.6% on the day in terms of profit, and that's using what I was talking about this morning on the ABL. So opening up 2 positions. Yeah, so opening up 2 positions. I haven't actually managed to get it working how I had it in my mind of how I want it to work. But for those of you curious, the idea was to have 2 positions. One which was, so let's say for example, I'm going to have 0.2% risk. I'd have 2 positions, each of them at 0.1%. When one of them hits 2R, it closes. That's the first take profit. And then the second one goes to break even. And then doing that, I've basically covered the cost of my trade. So there's no downside, right? Because I've basically covered, in fact, I haven't even covered the cost. I've already made 2R, right? And then the second one then goes through. The only thing I'm trying to figure out is how to position it in such a way so that I'm not having to hit 2R. I need to figure that out. Maybe I need to change the positioning, or maybe change the ratios of it. So kind of do almost like a, I don't know, 66-33 kind of split between the 2. I don't know. Trade dashboard, the EA that I use for managing my trades, is great, but it hasn't really given me any clear indication as to how to set this up, which is a little bit frustrating. Gold has hit this area right now, which I actually think we might start to see some buys come in. We'll see how it plays out. At the moment, on the 1 minute, it looks like we're looking at more sells. Setting up nicely on the 1 minute, but it really depends whether it wants to shoot on down or not. This setup here is a nice kind of re-entry area for sellers, maybe. Yeah, it looks like it's going further, which is nice. But this area is still an area of support because we previously had this very, very strong 1 hour candle pushing up. And I actually, do you know what, when you were talking earlier, I was looking at gold, and I actually think that gold might be long. I know that might be contrary to what everyone was saying earlier, but if you look at it, yes, we have got this big area here, but we've just got these big, huge moves up to push us higher. You know, and the higher the time frame, the bigger these moves. If I take it to, like, for example, the 22 hour, less so, granted, but it's still got another 8 hours to go on that one. The 14 hour right now is going to be really interesting. This current hour, if we see a pump over the next hour, then I would think we're looking at longs. And so right now could be theoretically a nice opportunity for longs. Just looking at it to see what the position might be, but you can see it's a nice engulfing candle. This one here as well, it's, you know, on the 11 minute it came down, and this is a really strong area where you might see a reaction. So
yeah, I would definitely be overall long on gold. I just want to be getting in a little bit lower where we are now, but on a larger time frame, long, I think.
Just wait to see. No, we've actually broken that area, so it looks like sells are still in control. So coming down further, see where else can we have a reaction from.
I'm looking at between 25 and 22.
As far as that, yeah.
Yeah.
Yeah. See, where are we? We've also got this nice little area here on the 7 minute. That looks like a nice area as well, potentially. We've really tapped into it technically with this wick. So it might be that one there, we'll see. Still trying to figure out how to do this. How to do this trade setup. I think that's good. We'll give it a go. Oh, look at that pump.
Dinesh was saying a lot of podcast traders saying doing futures mostly. Can you show it? Futures trading is basically going to be the same thing. It's just a lot of the podcasts out there, many of them are American, and so in America you can't trade CFDs, which is what most of the rest of the world, be it Australia, be it the UK, most of everyone else pretty much, all through Asia, Japan, etc. Generally trade off CFDs. In the US, they were banned after the financial crisis, basically, and so they can only trade the same markets via a futures contract. But essentially, it's not too different. You're still just trading the same underlying asset. It's just via like a slightly different vehicle, as far as like a kind of technical aspect. It's more legal framework really. So futures themselves are generally, they're exchange based. They're typically originally were used for other purposes, not speculating. Like I was saying earlier, for our commercials, hedging out forward prices of, their commercial activities, whether it be grains, products, metals, iron ore, copper, this, that, the other. And that allows them to just keep their pricing stable per their input costs, and the rest to their production and such. But yeah, nowadays people also use them to speculate on price movements. So
options do give you options swing. They do. Yeah. Yeah, that long on gold looks nice actually. Didn't respect this one, but it's still pushed past off on this one. So we'll see if it holds. As I say,
on gold today as well.
Can see us making a nice break and retest potentially. Yeah, look, we've come to the 50% of that move and bouncing off it. So, I mean, we'll see. I'm trying this two position thing, but it's not really giving me what I want in terms of how to take these trades. So I need to play around with it a little bit more to figure out how I want it to manage trades. D-Brock says he would short gold. Yeah. If you want to, you can. Don't have to do what I'm doing. I just like the way that gold reacted from that area in this area. Reacted off this one as well. Took the low of this candle and it's bounced off this one, which was a nice wick rejection. So next couple of minutes are going to be key as to whether or not it's pushing further or if it's going to bounce up. As I say, it's taken a lot of, it's left a lot of this liquidity higher up. So, I mean, for sells, I'd probably want to see it come up to here and then look for sells down. But yeah, the next minute really is going to be really key. if we see something very, very quickly like that, and then pushing up to create another engulfing bullish, then suggests to me that we're going higher, or at least pulling back higher, before maybe selling further.
Euro pulling back just a touch. Same with the Aussie dollar, same with pound. Dollar yen hardly moving that far though, overall. Very much a bit of hand sitting prior to the CPI, so.
Dinesh is asking for a good broker based in New Zealand.
If you're looking at like a traditional sort of broker, like a broker, not like prop stuff like the 5ers and that sort of thing. A regular broker, IC Markets is quite good. They have very good spreads, commission, all that kind of stuff. Whole bunch of platforms, all the usual stuff you want, like MetaTrader, that kind of thing. But then also have CTrader, stuff like that. They're very large company, trusted, reputable, all that kind of thing. And they're originally from Australia as well. So, but yeah, they're massive global company these days. But they have really good execution and things. So that would probably be my number one.
That lure guide, I found that I'm addicted to scalping. Any advice on how to break free from that strategy? It works, but it's gone south for me big time, more than long trades. I mean, I guess you mean swing trades. If you figure it out, let me know, because as LJ will tell you, I'm probably addicted to scalping as well, much to my detriment, which is why I'm working on this different way of trading, so opening up 2 positions at the same time, and kind of covering the costs of the trade at a 1R initially, and then going from there. That's maybe the way to do it. I'm trying it right now to see if it gives me any kind of extra edge, because I know that the trades can work, but I was over managing them. I was over kind of messing with them, right? Because when you are scalping, you can't help but look at the charts the entire time and think, is it pulling up, pulling down, pulling up, pulling down? My other problem was that just personally, so much stuff going on. Trying to trade whilst you're live streaming and everything else is it shouldn't be underestimated. It wasn't something that I really took much attention to until I started trading, joining the 5ers live streams in the Discord, and then ABL, and now here, and it's so hard. You guys want to you want us to look at certain things, so you're looking at you get chat popping up, you get different messages from different people all at the same time, from work and other things going on as well, so your attention is split across multiple different things. So it's really tricky. It's really tricky. So look, I would say, maybe you're doing scalping for various reasons. Maybe it's because of time, maybe it's because of whatever it might be, but maybe have a think about how you can structure or manage your trades better, rather than trying to force yourself to do something that you're not comfortable doing. For example, Griff, who is usually on a Tuesday with us during our segment, is a running joke that he doesn't take many trades. That's because he is super strict with his setup, and he's super strict with his, with just the patience and everything else that he has towards his trading. I don't have that, right? And I've openly told him that I could never trade the way that he trades. So I've frankly had a bit of a kind of a light bulb moment last night before I went to sleep, thinking, right, how do I still trade the way that I trade, but how do I manage the trades better, you know, and do it that way, you know. Blown a few 5k accounts, 50% win rate, but luckily I do have some liquidity to keep going, which I've saved up for. Weird thing, I trade with zero emotion. I don't feel nothing even when I win. Interesting. Yeah, I mean,
it's hard. Some days there's just, you get it can be an environment even for a week and a half where it's just not ideal for scalping, particularly depending what asset you're trying to scalp. And then after that week and a half passes, you'll just be crushing it for the next 4 or 5 weeks, and then you might have another period where it's 2 weeks, and the market's just not running smoothly per your approach, right? So one of the big things is just to understand that those times will come. So never allow yourself to be in a position where that's going to blow you up entirely through that small period where it's not working. That, or maybe if you're trading certain assets, scalping that all the time, you might go, okay, this is not working out right now. Have like a couple that you sort of look at, and you might find something better over there. And typically you want to find another asset that is sort of somewhat uncorrelated with what you're traditionally scalping. Because if you go, euro dollar or something, you're trying to scalp that, and you go to pound dollar, they often follow quite similar. So, high correlation means that if one isn't working very well, chances are the other isn't. But you could go from that to, like, I don't know, the NASDAQ or to gold or something else, or perhaps a yen cross of some sort, like AUD yen or pound yen or something like that. That might be more helpful. No worries, Dinesh. Yeah, I see markets really good. I think D-Brox was saying interactive brokers are pretty good as well. Depends what you sort of are looking to get out of things. They're definitely good for options and stuff as well. Interactive brokers. There's not every broker offers options, and particularly not like a complete options suite amongst all the different kind of assets you might want to trade. So, but interactive brokers is definitely pretty good. They're quite popular. They're quite low fees and everything as well, when it comes to other bits and pieces like stocks and the rest also. So yeah, definitely also a good option.
Yeah, gold pumping up. I'm just trying to. Oh, look who it is. Johnson, it's not us, it's the market. Snoozy. The markets are so snoozy right now. Like, there's nothing. What did you do? You had that Euro JPY, right? That broke out. Really nice trade, actually. Really, really nice trade. Jonathan's trade was something like, what was it? It was on the 15-minute, I think. What was it? He had breakout of this structure here. So he was getting in somewhere like this. Stops here, and take profit somewhere up here. I don't want to give a false impression of what he was looking at. I think it was 166,300 on Euro. Yeah, whatever, Jonathan. Whatever. Look at that photo. Isn't he a handsome devil? Look at that. That handsome fella. He's just coming in here waiting for us to pop that photo on the screen. That's all it is. We know you're a handsome devil, Jonathan. You don't need us to reinforce that message. But yeah, that was a really nice trade. But I mean, even that isn't necessarily. I mean, you had this one impulsive candle that came in that was the real breakout. But even that has stalled and really hasn't done much. The reality is that waiting for CPI, you know, everyone is kind of just sitting and waiting to see what the market's going to do, you know. But I'll tell you what, let's I've got an idea. Let's actually hang on, let's see what Daniel's got to say. Daniel's saying, have found scalping as the simplest approach to start trading, but takes full-on concentration, so I'm leaning into swing trading and I'm finding relief from a lot of stress. That's what a lot of people say, Daniel. I think the challenge is having the mental discipline to be able to do it, you know, and the patience, right? So you've got to practice that patience, practice that mentality. But one way to practice that, actually, which many of you may not realize, and actually starting today, because it starts every Wednesday, the 5ers have got a competition. So here's Jonatan to tell you a little bit more about it, guys, because if you haven't seen this, well, then frankly, you're missing out because it's for free.
Listen up, traders. We got a new competition with massive prizes launching at the 5ers. The top traders, they will win high stakes accounts, and everyone in the top 100 will get a prize, including hub credits and bootcamp accounts. We're actually doing this every single Wednesday, week after week, so you will always have a chance to win. It's fast, it's free, and it's easy. All you have to do is just sign into the 5ers Hub, click on the contest on the left menu, and join the upcoming competition. We hope to see you all there. Good luck.
Did that get us a little bit pumped up? I don't really feel it did it?
No.
It feels a bit like that, you know. I think what we really need actually is something a little bit like this to get us pumped up. There we go. There. Come on. Let's go. There we go. All right. That's a bit better. All right. We're a bit more energized. All right. There we go. Do you know what? If that is genuine, I'm not doubting you there, Le Guide, but if that is genuinely the case, that you don't feel anything when you win, that's a good thing, right? That is a good thing. You do not want to be attached to it, right? That is, you know, some traders spend years and years and years and years and years that want to get to that state. You know, so
yeah,
that I would say is actually that's actually a good thing. And swing, mate. Honestly, if I think the reason you feel I'm the epitome of calm is because I have spent many a night not sleeping, and so I'm sleep deprived. I have 2 young children. And so when I get home, all of the chaos and insanity is released from me then, which is not a good thing for my kids, obviously, and something I'm working on as well. But by the time you guys get me, it's like, so yeah, I'm like a deranged swan in the sense that I'm gliding across the water, but down below is like just going absolutely doolally, not even know which way I'm going. So yeah, that's how it's looking. Wouldn't say you're too honest, mate. Why would you want to feel those losses? That's my question.
I guess it can like help you from. You can sometimes take losses too easily because you're too accepting of it. And just you let yourself get beat up, whereas otherwise, if you felt the punch a bit more, you'd go like, oh,
yeah.
or maybe
have you have you watched Lure Guide? Go and watch it or read it, because there's videos on YouTube with him. Mark Douglas, The Disciplined Trader. Go and read that book and come back to me and let me know what you think. You know, Jonathan's saying you need to risk more and lose more money, and then you'll feel it more. Bet the house.
At the house, yeah.
Exactly. Do you know what? The 5ers did a whole thing on risk management a while back, and I think it's in the library on YouTube. It was like an entire day called the Master Risk event, and it was an amazing event they did. It was about 2 months ago now, I think, beginning of April, something like that.
Yeah, I think it was, yeah.
So Daniel, go back and check that out. But risk management is actually is the foundation of everything. I spent a little bit of time yesterday, which is actually where I got this idea for splitting my trades. Just sitting down and kind of reading through some bits and pieces, and it reminded me of, actually, I'm not being sensible with my risk management. You know, I'm being too inconsistent. I'm being too undisciplined. Tom Hargatt's Best Loser Wins is also a great read. I read it about 2 years ago now. A friend of mine lent it to me, and I want to read it again. So yeah, there we go. Master Risk is what the event was called. So definitely worth checking that out. But going back to your question, Daniel, how many trades to open and percentage of capital to risk? It really depends on your trading strategy and your style.
Generally you don't want to go like sort of beyond 1% at any given time. Maybe if you've got a couple of trades on, and if they're distributed across various assets that have a different sort of profile, slightly uncorrelated, that kind of stuff, you can go, I don't know, 1.5% or something. But you don't want that one set of trades to blow you out so heavily that you've only got like 3 bullets in the chamber before you're down 10%. You've wiped everything, right? So you want to set yourself up with enough at bats. You don't want to just strike out immediately. So
and the problem is, when you're a beginner, you want only to trade without setup, without risk management. But I mean, this guy's he's okay, you can pop to, look, I've been there, right? I've popped 2 accounts in a day, so I know, right? I know how it is, and I know how it feels. I have openly said it several times. I have blown more accounts than I've probably had hot dinners in the last couple of years. So my ability to blow an account is unbeaten, I believe. Certainly amongst the hosts that we have on the stream, for sure. But the thing is that you can look at it in 2 ways. You could look at it as, right, okay, I've done these silly things, I've blown these accounts and everything else, and I keep blowing accounts, or what have you. If you're seeing absolutely zero progress or zero improvement, then yes, you've got a problem, right? But the fact that you're sticking at it, the fact that you're still going, the fact that you're still pushing through, is actually a good thing. It's a indication that you are, you're in it for the long haul, and you've got the motivation and the resilience to keep going. But you've got to learn from it. That's the key thing. Liban, I see you and I raise you. I see you and I raise you. Jonatan, you're one to talk, mate. All right, you've blown counts just as much as not as much as me, as I say, but we've all blown accounts. We've all been there. I'm not saying we want people to blow accounts. We don't want people to blow accounts. We want people to get funded. But everyone has their own way of looking at it. I look at it as if I'm blowing an account and I don't learn from it, then there's a problem, right? But I look at the money I spend on, say, a 5K high stakes or something like that as part of my education. Rather than going and spending thousands for one of Jonathan's courses, I go and I spend money on a funded challenge. So yeah, but one thing I was going to say to you, look, guys, is, and to I think it was Daniel, if you're worried about how to manage your risk and everything else, go and get a trade manager. Go and get an EA that manages your trades. All right, because that's really the only way to manage it. I think, it removes the human element out of it and it automates it a lot better. I've been trying to mess around with it today, but I haven't managed to get mine working as I want. So we'll see. But yeah, ignoring your gut was the biggest mistake as well. I've learned that even if it's a 0.25% for the day, it's a good day. Yeah. This is the thing. LJ and I were chatting yesterday, right? LJ, we did a compound calculation yesterday, didn't we? Where we looked at, right, let's say on average you made 1% per day. Right now, 1% is good per day, right?
Yeah.
But what was it? What was it we were looking at? We were looking at something like, if we started with $5,000 and you consistently did 1% every day, working day in a year, what did it get you? Like 66 grand or something?
67k or something.
67 grand.
About a 12x,
right?
basically.
Yeah. Now, stick that 5 grand into a bank account, right? You'll get
12 and a bit.
Nothing, right? You're not going to get anything from that, right? So already, you're miles ahead of what you would get anywhere else. So if you lowered that down to even 0.5%, I mean, the maths doesn't work out exactly by halving that amount necessarily. But let's say it did, what, 33 grand from 5 grand? Yeah, okay.
Yeah, that's basically what it comes out to. Yeah.
I'll take that. Thank you, Adil. Thank you. Yeah. Leave the account blowing to me, guys. Don't blow your accounts. Just let me do it for you. As in, I'll blow my accounts. All right, and we'll do it that way. I lost 2, 1 from human error because I was lacking experience, and 1 from wrong lot size, putting second one left to start. Are you talking about accounts there? I'm curious. There you go. Jonatan has spent years trading, right? And he has looked at every angle of all of the different sides of it. And he is, he's a very successful swing trader. And now he's turning his hand to day trading and still smashing it. So pay attention to this man. He knows what he's talking about. And actually, on that note, because we haven't done this yet, we've played a few intros and stuff, but we haven't actually talked about the AlphaBeta Lab. So a link on your screen right now, guys. Head on over to the AlphaBeta Lab, where we have got a community of like-minded traders, like-minded individuals, each sharing their stories, sharing their journeys. Anastasia's in there, sharing great insights and bits and pieces. All sorts of bits and pieces in there. We've got the lab lounge, we've got the traders desk where people are sharing their trade ideas as well. So there's a lot of information in here that's useful. But then on top, we've then got courses for free, right? You've got Jonatan's technical analysis course. 4 of the 6 modules are out now. That is over an hour of education, high quality content, talking you through technical analysis. And 2 more modules are still to come. And they'll be coming out in the coming days and week. But then you've got the fundamentals, foundation to fundamentals. You've got the foundation of controlling the monkey mind with Louise Bedford. We're working on an NLP course. We've got Alex with his intraday trading course. We've got a great gold trading system with Daniel as well, which has been hugely popular. So there's loads and loads and loads of stuff there. And then on top of that, you look at the events that we have. We have Beyond the Ticker, which is our fortnightly podcast with LJ and with Dirk, where they go through all the macroeconomics and the fundamentals of why the markets are moving the way they're moving. And it's all for free, guys. It is all entirely free. So really, there is no reason for you not to come and join us at the ABL. So thealphabetalab.com, come join us and let us know what you think. Yeah, we'd love to see you in there with us. If you've got any questions, pop us a message in the chat, and we'll be happy to answer those. But yeah, make sure you come and join us over in the lab. We'd love to have you with us.
Indeed.
Let's see.
Shall we go a quick run back of the charts? Since it's been a bit slow, but we have had a little bit of movement in the past.
Gold has picked up a
not
little
far
bit.
at all, but tiniest bit.
Gold is slowly picking up some steam, but I mean, I say that very, very loosely, really. I mean, it's just gone. It's painfully slow. Let's go have a look at euro dollar. Euro dollar has pulled down a little bit.
Yeah.
So it's coming back down to this kind of key area previously. I think we've still got a little bit more to go for it to pull down. Dixie getting a bit of strength, but still, it's just thing was, remember we were saying, I think it was this morning, I was saying, how is this going to react from here, right? And actually it's pushed up higher. So I do think that the Dixie is probably actually going to range a little bit more, at least maybe up to here. Certainly whilst we wait for news. We've got news in an hour. So I think we're probably now just going to be seeing very, very slow volatility in the market. Waiting to see how things play out. Structurally, from a technical standpoint, the Dixie actually looks bullish to me. Right now it looks bullish, but you know, we've still got this whole area that we didn't really test at all. We kind of dipped our toe into it and then shot straight out again. So I do feel as though there is a need for us to retest these lows a little bit deeper. So we'll see. Nah, it's all good. Wouldn't worry about it, Henry.
Yeah, dollar yen as well. We're up to the top of sort of where we peaked just earlier during the day, towards sort of afternoon of Asian session. Which has got kind of a double high on dollar yen there. We're very much just hanging around for the CPI.
Yeah.
Unfortunately.
The thing is when you look at CPI, we're looking at CPI and waiting for it to come out, right? If I look at this on the daily, this is pound dollar, right? Pound dollar at the moment, the lines that I've marked out, I need to get back to labeling these things, but if you look at them, they're basically saying that there is major liquidity here and there's major liquidity down here as well. And there's certainly some down here as well. So there are areas on both sides for price to come and take. And so something like CPI, where there is generally a consensus that we're not going to hit consensus, we're going to be softer, for example, as LJ says, than expected. That's most likely going to act as a catalyst. So I can see two things happening. We're going to come for either this cluster here, we're going to come down and then go up and then go for these, or we're going to do a push higher, react potentially off this and then pull down. I think the more likely of the two is this one. That's my general feeling at the moment.
I do have a slight net bias to sell dollar and buy the rest of the market. I mean, that seems to be a lot of what the sort of pre-positioning is sort of telling you as well, with the exception of dollar yen. But that's also in part because, I mean, every single other yen cross has been rallying pretty heavily due to the yen selling from the Japanese finance ministry the past couple of days. So you're going to have a slight distortion there. I'm not 100% convinced there's going to be all this inflation coming out of the Trump tariffs. There's just no indication of that. That's just not. I feel like we've been here a million times talking about this stuff. inflation always ends up coming from the supply end, right? When you have the supply constraints, rather than any kind of demand factors.
Vikram, you absolutely can trade how you want. If you want to add positions into your trades, then of course you can do it. If you've got the margin and what have you, then of course you can. Just manage your risk and be careful with it, but you absolutely can. No problem with that whatsoever. And Happy Tomato, apologies, I've changed the music, so hopefully that's a little bit better for you. We do tend to have music, at least on our segment, because we like the vibe. This is kind of how we do things with ABL. A little bit of background. So yeah, what do you think about gold tapping 33.19 and then going up again? 33.
Yeah, I was looking around that area potentially. That was ideally where I wanted to jump in. It'd be somewhere below that 25 to 22 kind of area for myself. We didn't quite get the momentum down through there, but I do still feel like as far as safety, like coverage, in terms of like risk reward, if you do want to jump in gold, I feel like entering from down there is going to be your best bet.
I would be.
It's either
really
that or
interested.
it's either that or sort of wait until we get a break of 33.50 like we had before, and then just once you've got that confirmed break, just capture the rest of the 20 or $25 on the upside up to 75. But in this middle part of the range, we could easily come right back down.
I would be really interested in actually selling from this zone here, kind of 33, 35, 33, 36. If we get a nice setup on the 1 minute, this is a nice area to potentially sell from, to then take us down to the 33.19 area that you're talking about, Plavsa. So yeah, but generally, I do think we've got longs potentially coming in. So yeah, and I did have a quick look at that swing. Doesn't look like much, to be honest with you, mate. I mean, yes, it's moved down on the 1 minute, granted, but when you take it out to like even just a 15 minute, that's just horrible price action. That's really not my cup of tea at all. Vikram, I did address your question. I literally just did it. So if you missed it, go back 1 minute and you'll see that I addressed it. Yes, you can add quantity in a running trade. You can average in on a running trade. Just manage your risk, make sure you've got enough margin, and of course you can.
Averaging in is good. Same thing with like taking partial profits, averaging out as well, completely valid. Just depends how you want to structure your,
There's a really good technique that we were talking earlier about the master risk event that we did a while back. A really good technique that Sal, the CEO of the The5ers, mentioned, where he will cut. I can't remember how he does it. I think he cuts down his stop loss or something so that his losses aren't as big. So he reduces his stop loss. So, for example, if he's going into loss, then he'll cut half of the trade so that his losses aren't a full stop loss, if that makes sense. And then if it goes back up, then he's still in the trade. But it's interesting concept as well to consider. So yeah. But guys, if you want us to have a look at a chart, then there's nothing wrong with some pleases and thank yous. So give them a thought. And there you go. Look, there's that sell I was talking about on gold. Really, really nice setup there. It has decided to leave this level of liquidity, at least for the moment. It might still come and get it. We'll see. But that's a really nice reaction. We'll see how it continues to close on the 1 minute. Because that's a nice rejection. Let's see. Yeah, it's a nice earlier.
It's not going to way. All the S&P, right? Everything's just literally just holding out.
Yeah.
For the fireworks later. It's a bit lame, but I mean, makes sense obviously. So what else do we have? We had oil jump up a bit earlier after the Iran headline that we had around the nuclear deals.
Yeah, looks like we might actually push up higher. Yeah, there we go. Coming for that level. We've taken that one. So really the next area that we might see sellers, if this area is going to hold, is probably actually now going to be here. Once we take these areas, I think. Let's see. I'm still trying to figure out how I manage this two positions on my trade dashboard. It's proving more tricky than I was hoping. So yeah.
Does it not? It sets it all like automatically though, doesn't it?
It does, but the problem is what it does is it opens two positions, but you can have the option for multiple take profits, but each position will have the same take profit.
Yeah.
So you might as well. Yeah, I
so
probably
you kind
just
of have to do it. It'll sort of set it up, but then you have to kind of go in manually a little bit. Anyway.
Yeah, exactly. So it's a little bit fiddly. So yeah, I need to figure out the best way of doing it. Really, it's a very, very powerful tool, but it's just not quite how I want it to be set up. So I have messaged the guy who's made it and built it, and waiting for him to come back to me. So we'll see if he replies.
Fair play.
Let's go have a look at the NAS. Yeah, the NAS took a bit of a dip, but it's come back now into that range again. For CPI, interesting. We've taken these highs. So I feel as though the NAS is going higher. I've got to say.
I definitely, we definitely still got the structure to move higher on the NAS. Definitely looks like we do want to take a shot at those all-time highs. Question there, how much of a break we can get, or if we just sort of run through it a touch, doesn't stay up there for very long, we trace back under, and it's a bit of a fake out. So long as CPI doesn't come in too hot, and potentially as well, like I was saying, if we do get that maybe pretty tame kind of read, then definitely that would be positive for the S&P, for the NASDAQ, all that kind of stuff. So you could definitely get the run up then, and we might finally take that dash for the all-time highs.
Hey Tiago, good to see you, mate. A few questions. We've got Luis asking about dollar yen. You were buying this, weren't you?
Yeah, I am still long as far as the total structure. I am starting to get more hesitant as we've been coming up now, just because I would have liked to see it sort of accelerate a bit quicker than what we have. And often once you see it you're really kind of grinding your way up there after some of the swift acceleration we had earlier. Sometimes that can signal a bit of hesitation. So obviously you've got this near-term high, clear breakpoint if you run that, heading back up through 146. And then ultimately you have to see if we can run that 146 area up into the 148s. It may very well be that 146.25, that price high that we came off from, might be a bit hard to get past at the minute, just given the larger, fundamental structure between the dollar and the yen side of things in relation to bonds and yield differentials at the minute.
The 1 hour,
Yeah.
sorry, not the 1 hour, the 4 hour on dollar yen looks very bullish, I've got to say. Just looking at the structure of how the candlestick patterns are forming, it does look very, very bullish. So certainly can see longs in there coming through. If we break this level, what is it, 145.291 on forex.com, then it looks very, very strong for longs. But yeah, I would, and this is the key thing: wait for the news, and then try and get your best possible price, because the news will whipsaw things. There we go. I think we've broken that level, haven't we? So
yeah. So I'm still long, but now just getting more and more cautious about the long side.
Yeah.
Basically. So it's still definitely in play, but you just have to take into account that yes, the upside move is starting to decelerate to a degree.
Probably
so
next
just,
resistance level we're just coming up to now on the 15-minute is this one here. We haven't quite tagged it yet, so that might be an area just to either consider for take profits or consider for sells. So yeah.
Yeah, we were talking about on Monday and originally jumped in long at 144 when we had sort of that shift through there. And it's definitely carried on. I just would have liked to have seen the price action yesterday and today be a bit more convincing after that strong move higher. So yeah, definitely still in play, but yeah.
Pound yen, on the other hand, is less convincing, I would say. Less convincing. But this candle was a new candle, so we have to take that, at face value as much as we can on that. But I do think that there is less strength in the pound than there is in the dollar or the euro as well.
The euro
against the yen. The euro yen, that trade for Jonatan, looking very, very nice indeed, as you can see there. Pushing higher. It's coming for this level here, which was, what was it, a 3-day inside bar? Yeah, there you go. 3-day inside bar. I think it might be on other time frames as well. Let me just check.
Yeah, euro yen has been very good.
This is what's holding it up, basically, is this level here. If I just draw that out, that's what it needs to break past, and that's why it's just stalling just a little bit. As it, let me just lock that so I can. There we go. Go to the back. Why is it the trades always send to the back? Go on. There we go.
There you go. Yeah.
So yeah, that's why it's just stalling just a little bit, because there is this kind of 2-day engulfing candle, but it's not strong enough, I don't think, to hold us off from this 166, 115 level. So we'll see how that plays out. CPI today is good or bad for the dollar? We don't know.
Hard call at the minute.
We don't know, because we don't know what it's going to be. So yeah.
Yeah, because you're going to get the first points of properly fresh inputs from the tariff effects. So logic would say yes, that should marginally drive up prices, that kind of thing. However, it's also tough. I think there is some overestimation about just how much. We have also had some other effects with energy inputs and stuff recently being lower. So that could tap things down a touch. We have also, though, had the dollar also weakening, right, which is going to mean inflation a bit higher. So yeah, it's going to have to be one of those by the by, literally wait for the number and see what happens. Because especially with the positioning currently across most assets, we're all kind of bottled up into this slight range where you can see clear points where every single market will break and just run one side or the other. So similar to what Forex made familiar is saying right now, I can definitely see euro-dollar bullish momentum building up. However, completely depends on the CPI at the minute, because have been looking for potentially a bit of further weakness. We haven't got that. We haven't really got proper strength either. We're just sort of banging around in this sort of low 114s at the minute. So you can check a couple time frames and it's looking very strong. Like the daily is looking much better now. That looks pretty healthy. Same with the 4-hour bars that we created just earlier, towards the start of end of Asia and start of London session. We got those wicks on the base of them, and definitely appearing as though we want to take a run for 115, but that's awful play with the CPI. We could easily get knocked. We're back below 114 where we based earlier on, and then from there you get probably like just a straight run down into 113s again.
Tiago, I don't look at the yen basket index. I just pulled that up, the yen index, but it wasn't a very good feed from TVC. So if you've got one that's on TradingView, let me know and I can pull it up. But it's not something I've personally looked at. I'm sure it's something that LJ has, but I don't tend to trade the yen pairs very often. So
the other baskets,
but the interesting thing with gold is I'm wondering who, if anyone, took the sell from here. So we had a really nice sell opportunity where we rejected these two levels. We were in this 15-minute wick. It's still got a couple more minutes left, but it's looking quite bearish. We'll see how it plays out. The 1 hour looks like a nice push further down on gold as well. Nice potential trade that was. Not one that I took, I have to say, but it would have been a nice trade. Tip Wizard took the sell. There you go, Tip Wizard. Maybe I should have your name, seeing as I was the one that gave the tip. But but we'll see. It's pushing up again, so it may not hold too strongly. Nice 7-minute downward candle. Same on the 11. So it really depends how this 15 minutes is going to close. The next couple of minutes will be kind of key.
My minor bias is still slightly euro dollar positive and thus dollar yen negative. But yeah, really need to cross that CPI hurdle.
One thing I'd always, I'd really strongly advise people to take a look at, if you're ever looking at gold, right? Look at the time, right? We're in the final minute of the hour, right? And just watch how gold, 10 minutes to go until the end of the close, and it's showing some really bearish momentum, right? Really strong bearish momentum. It's then all of a sudden pushed up and then showing a lot of bullish momentum. And in the final minute, it's what's it doing? So those final 5 minutes of a 1 hour candle on gold can really change the entire outlook and the narrative that you might see on a chart otherwise.
Same on currency as well. You can go one way for 45 minutes. That final 15-minute bar shifts it. You come right off, and then that sort of accelerates in that final 10-5, and then 2 minutes before the hourly close. Same deal. Definitely. Because
if you see this one here, the way that 15-minute has closed is actually come down and tested the wick down here, and somewhat rejected it. But it did come down far enough, I would say, to suggest that the sells are in control for now, but not massively. It wasn't overly convincing. So if you are in that sell, make sure you put your positions to break even, or just carefully manage it, because it's a little bit choppy, especially when we've got news in half an hour. So yeah. I see we have the man, the myth, the legend. Well, he's not so much of a myth really, because everyone knows who he is. But we love him nonetheless, even if he's not so mythical. It is our Swedish guru, the market legend, the CMT. I don't know what you want to call him, but we love him. So Jonathan's waiting in the wings. Jonathan, you on your own, or you got somebody joining you? He's on his own.
Booking spots to Turkey at the minute.
He's buying some just for men hair dye and hair gel. So yeah. Alrighty, well listen guys, that is basically us from ABL. This is our segment coming to an end. Jonatan is ready to pick up the reins once again and see you through to the next little bit, with the news coming out in half an hour. So thank you as always for having us. Trade well, trade safe, trade safe, and we hope to see you in the lab. Aftermath, for sure. Trade the aftermath, exactly. Yeah. Don't trade the shootout at the beginning. Trade the aftermath. But yeah, great to see you guys, and we will see you next time. Take care.
See you guys later. Ciao.
All right, guys. It's got JPY, Euro JPY, looking very good. Breakout continuing. Might be able to pull this account back to break even if we hit the TP of this trade. I feel like I'm going to be adding. Feel like I want to be adding to this, and you know what happens when you start adding to a position like this. This is that's the reversal, you know, like you have the feeling of you really want to be adding to position, everything's looking good, and you want to be, you know, taking screenshots and sending to your friends and family, you know, like, look at this, mom, I'm a successful trader. When that happens, when you get that feeling, like, first of all, nobody cares. I'm just gonna, you know, nobody cares, and that's that's when you want to take profit, and when you want to, you know, show off your good trades, it's a good time to take profit. Am I going to take profit though? No, I am not going to take profit. No way. No way am I going to take profit here. Why? Because most of the times I'm not following my own advice, right? I would say that I have a fairly good trading advice, but do I follow them? No. I don't like do as I say, not as I do, you know? Gold hitting the reload zone, hitting that reload zone, bouncing inside the reload zone. Very good, very nice. Gold looks strong. I want to see that reclaim of 3345. Forget that. I am going to what type of name is this? Racing blown second account. All right, good stuff, man. Good stuff. Stop blowing accounts, guys. I had the, you know, saw the conversation earlier. What are you guys doing? Stop blowing accounts. Get an account, trade that account, and stop blowing it. Like, you want to know how not to blow an account? You go to our YouTube channel and then you Google new trade open. I got my algo. Boom, my algo opens a new position on the NASDAQ. Now I'm interrupting myself. We're taking it to the next level. Not only am I interrupting people left and right, I'm interrupting myself. Went long on NASDAQ. Breakout trade on NASDAQ. Terrible trade. Terrible trade. Do we have anything going on? It feels like we have news. Ah, of course we have news. The man, the Trump. Oh, yeah, I'm gonna pull it up. We got something going on, guys. We got something going on. We have something going on. We have Trump. Trump is saying, we're getting 55% tariffs. China gets 10. China deal done. Relationship is excellent. Are you guys seeing this? This is the stuff that we're seeing. This is the stuff that we're seeing right now. Trump has spoken. The man has spoken. Look at this. Says it right here. Our deal with China is done. Subject to yeah, how am I supposed to be able to pronounce this name? I have no idea. XI? It's, oh wow, that's not, you know, that's how it's spelled. Our deal with China done. The relationship is excellent. We're getting 55% tariffs, China getting 10% tariff. Deal with China is done. That's what's going on. So what's happening right now in the markets? Well, not a lot of things are happening in the markets right now. We kind of see a lot of indecision because we're seeing the same type of moves on gold as we're seeing on the indices right now. Or is this a risk on? Is this a risk off? Is this a LJ's in the comment. Please give me signals. LJ, what's going on in the comments? This Trump alert graphic, that must be the most ridiculous thing that we've ever done here in the live trading room. But look at him, he is so lovable. You know, it's like the deal with China's done. Yeah, let's go. Don't show that little clip of me trying to dance to my fiance, because I will be left alone for the rest of my life if that is going to be circulated around the internet. You know, that in combination with my reclining hairline, like she loves me. You know what I mean? Okay, so we got CPI as well, but that's not really what's happening right here, because the CPI is coming on in too late. What do you mean, Void? Too late? You're too late. Okay, our deal with China is done, subject to final approval from President and me. Final full magnets. And any necessary rare earth will be supplied up. Okay. Great. So this is all good. But what does this actually mean? You know, what does this actually mean? Let's take this ridiculous Trump thing off the screen here. What does this actually mean for the market? It doesn't really tell us much, does it? I mean, okay, so the relationship is excellent. Oh, that's good. That's excellent. But the indices, I don't know, like, what's the initial reaction here? Let's take a look. The bottom line is, how is this affecting Euro JPY? I mean, that's the only thing I care about right now. Oh, well, hello there. Things are looking good. Things are looking good. I'm gonna say it again. Things are looking good. Can't be said enough, because it is looking good. Okay, so let's take a look at the S and the P. Ooh, wow, look at that. That's like China, no China, relationship great, relationship not so good. This is indecision right here. This is a market that has no idea what's going on, no idea how to price itself. And then we got the CPI coming out in what, 20 minutes? Yeah, that's gonna be insane. That's gonna be, we're setting up for a rather interesting environment. I'm gonna switch over to my money making machine. My money making machine. That's this one right here. Ooh, that's the bootcamp account. That's all the that's where all the algos are connected to. Oh, by the way, I also have the funded account. I forgot about that. I've connected the funded account to the algo account. But I don't even think I have connected it to MetaTrader. maybe I removed all the details from that from MetaTrader just to make sure that I don't log in and do anything, you know, with it, because, you know, so far the automated system has been working quite well. Let me go over to the 5ers dashboard. Take a look at that. But yeah, that's the trade on the trade that you're seeing right now on the screen. That's the trade on a NASDAQ based on a so this EA is looking at a combination of, I believe it's a combination of ATR, Bollinger Bands, and ADX in combination with price levels, and it's looking at like the most probable oh, that's a tight stop loss. My stop loss is gonna get hit. That's an insanely tight stop loss. Why does it have a stop loss right there? Like, I'm gonna get stopped out. No, look at that. That's my stop loss right there. How am I not stopped out already? Oh, right. Okay, no, that's the stop loss. That must... Okay, so this is the stop loss for the short, and that's the stop loss for the long. I hope so. Otherwise, I would have been stopped out here. Okay, let's look. What's the stop loss here? 21,773. 21. Yeah, okay, so the long stop loss is down here. That's the short stop loss. Okay, this makes more sense now. This makes a lot of sense now. Nice. Okay, so that's a one. Yeah, so this system is using 1-to-1 risk to reward. All right, we're safe. All right, let's go. Let's go. Okay, so let's take a look at the 5ers dashboard. Let's see happening with the what is the confidence, Nick, to your entry? Who's Nick? Can't see any Nick here. Did you see that Elon Musk went out and said, like, I'm sorry about my tweets, guys, I'm sorry, I overreacted. It's insane. Like, these are the two probably like two of the most powerful, richest people in the world, and they're like beefing it out on Twitter, just like us. Shows that they're just as immature as the rest of us. Right, okay, so where's the funded one? Okay, so this is the funded one. This is the funded account. I'm gonna show you incredible results. Look at this. Amazing, absolutely amazing. Huge wins, huge result. Insanely cool. Yeah, okay, so this is the one. This is the funded account. This is the 40K hypergrowth. One trade, one loss, 0% win rate. Yep, that's the one. Okay, so I took one trade on I have one trade open on NAS, and then I took a one trade yesterday on US 30. On this particular account, 0.5% per risk. Okay, 0.5% per risk. Yeah, these are the best results we've seen. Beautiful results. It's the best. I love these results. Let's see. Mr. Silver says, if my TP hit during the news in 2 minutes, am I going to be this? Depends on when you entered. Okay, depends on. Now we're talking. ML, yeah, you know. Okay, so it depends on when you entered. Like, are you entering? Are you trading based on the idea that the volatility will, the volatility around the news account at the news event is going to make you money? If that's the case, then yeah, we don't like that. You're not supposed to be trading based on the news. However, if you opened a trade this morning, or you opened a trade, you know, yesterday, and now it's gonna move with the CPI announcement. Yeah, that's okay. You know, that's definitely that's not trading based on the news. All right. Yeah, and if you entered within the 2 minutes before, and that's you're not gonna make money. I mean, if you make money, you're not gonna get that money. If you lose money, you'll keep the loss. Yeah. So this is the account. I have 800. How come I have 800 in profit? Is it because this money got taken from the evaluation account? Is that how it works? It was a while ago that I got funded with hypergrowth. But this will be added to my payout. Huh. You know what? Instead of me teaching you risk management, go to our YouTube channel and search for risk management, and you're gonna get a what is it called? A webinar from Victor on fractional risk management. That's the only risk management webinar you'll ever need. Okay, so that's the funded account. Now, to make sure I don't share all my details like I did yesterday when I shared my whole login information to MetaTrader, don't worry, I've changed the account. Make sure we're not gonna put ourselves in that situation. I'm gonna be sharing MetaTrader here while we wait for me to share something else. What else do you want to see? You want to see the we got the. Yeah, I'm not going to show the high stakes evaluation because that one looks terrible. What we could do is we could show an account that looks good instead. Show the boot camp, the one where it's 100% automated. That's pretty cool. Yes, we are aware of the issues with the dashboard. We are working on that as we speak. Okay, so this is the bootcamp account, and this is fully automated. You can see here we got 45 trades, 44.44 win rate with a profit factor of 3. But the thing is, all of these trades from here to here, all of these horizontal lines, that's just me testing the algos. Okay. That's me testing the algos, making sure that the copy traders and all the signals are being forwarded to the right places. So imagine if you remove this, then the equity curve actually looks really, really nice. I'm very close to hitting the target here. You can see the target is very close of hitting the target of the first step of the bootcamp phase. I would really love to see this current NASDAQ trade make me some money on the funded account, because it kind of sucks to start losing. So you get a funded account, but you all know how it is, right? You have an evaluation and you start trading, you get funded, and then something that's very normal is you get funded and then you start trading based on the fact that you're happy that you get funded, and like you become overconfident, and a lot of people actually lose their funded account quite quickly when they get funded. You trade well during evaluation, you get funded, you get happy, overconfident, boom, over trading, you lose the account. It's actually very, very common. Okay, but let's not look at the dashboard anymore. Let's look at something that is slightly more entertaining, which is what? Which is TradingView. Where is TradingView? TradingView is where? TradingView is here. Let's pull TradingView up and we can take a look at that. Okay, so what is the S&P 500 telling us here? The S&P 500 is telling us here that it's a good question, by the way. How does one learn trading psychology? I will show you, I will tell you, and I will show you. Gotta be careful about, because I got the GPU right there. This is how you learn. This is how you learn trading psychology. I have already answered your question. If you enter a trade 2 minutes before the news event, you will not be. You'll not make any money if you make money. You will lose money if you lose money, though. That makes sense. You'll keep the losses, but you will not keep the profits. So it's a 4-minute window, 2 minutes before and 2 minutes after. If you have entered a trade like 2 hours ago, and that's not going to be a problem. It's about entering the trade. Man, I really need to plug in that GPU because I feel like the more time it's spent outside the computer, it's like with swing trading, right? The more time you spend in the trade, the higher the risk of making mistakes are. And it's like the longer it stays here, the higher the risk is that either I or my son is going to destroy it. Book or videos? Read the book. Trading in the Zone by Mark Douglas, and then maybe also Tom Hugard with the Best Loser Wins. Those 2 books, combine it. There you have it. You don't need anything else on trading psychology. And if you want a book on technical analysis, I think it's John Murphy. The technical analysis book from him. Really good stuff. Rafael says you need to change to PSU. PSU, yeah. I do have a new... It's actually right here. It's actually right here. It's waiting to be installed. Have it right here. Not doing anything good, though. It's just standing here. I don't have time. That's the thing. I don't have time for this. For this, I do. But not for that. I don't have time to install it. Oh, man. Euro JPY... Sell gold, my friend. Sell. Mega One says sell gold, my friend. Well, okay, my friend. We will look at that. But thank you for the recommendation. Why would you want to sell gold here? Well, okay, I can understand why maybe you want to sell gold here, but I'm actually looking for more upside. I'm looking for a break and retest of this level for a long. I'm not very interested in gold sells, even though from a low time frame scalping perspective, maybe. Is Trump tweet considered news? No. Unplanned events are not considered news. Okay. Unplanned events like Trump's like a gray swan, It's like you never know. You never know when they're gonna show up, but when they do, they're like, wow, that's ugly, Yeah, do not sell gold in 8 minutes. We got inflation data coming in. Exactly, we got Dirk putting it, that's some edge from Dirk right there. What do we ask? Let's make sure they hit that like. I got a standing offer, 500 likes, and we'll give away an account. We'll do a giveaway, 500 likes, and I'll initiate that giveaway right away. Wait, didn't we get a live stream with 500 likes like 2 weeks ago? I will look that up, and if that's the case, then we'll do a giveaway tomorrow. But you know what? Let's take a look right now. Let's take a look right now, and if we have that, then let's do a giveaway right now. But do remember that we had a live stream like last week or the week before with quite a lot of likes. I think maybe we hit that 500 likes while being live. So I don't know if you want to give away today. I mean, it's might not be entertaining quality content, just giving away accounts. But if that's something that you might perhaps want to do, then maybe. Okay, so let me see. We got. I actually do not see any live stream with with 500 likes. I remember when we had the live stream live, and I remember that we were getting close to 500 likes. But when I'm looking at the likes right here, we had a live stream last week where we reached 430. So almost 500 likes. So remember that, guys. As soon as we reach 500, we'll do a giveaway. Yeah, I think last week was very close. We got an alert on gold. What's happening on gold right now? We got a possible breakout happening on gold right now. We have the news coming out in 4 minutes. We got 4 minutes right now. We'll share the. I will share the 4 screens. Where is that one? I got one with 4 screens. Oh, it's behind me. Okay, behind me. Now let's not look at that. What do you guys want to look at? Let's see. Okay, we got gold. We got EUR USD. We have S&P 500, and we got Bitcoin. Okay, so here we're watching gold, EUR USD, S&P 500, and Bitcoin. I'm also going to be activating the live voice squawk or whatever it's called here. See if we can get anything interesting. See if I hear it. Voice. Oh, that's loud. Yeah, when we. I don't care about that. I only want to know about the CPI. Be quiet. All right, that's better. Okay, so we got not long. It is now, isn't it? Yeah, it is now. All right, let's go. Wait, am I even? It is today, right? Yeah, it is today. US CPI coming up in. Coming up soon. Why is it not syncing? It's really weird. Look at how it's behaving very weirdly. It's not syncing very well here. Super weird. Supposed to be syncing here. That's weird. Right, less than 2 minutes. Am I on the replay tool or something? I must be on the replay tool. This is weird. Oh, is that Right, I got 1 minute. Okay, that makes sense. I was on the wrong chart here. Okay, we're looking at gold. Gold up the upper left. We got EUR USD on the upper right. We got Bitcoin on the lower right, and then we have the S&P 500 in the lower left corner. We got 10 seconds coming up now. We have I'm gonna update you as soon as we have the numbers coming in right here. We're seeing, okay, numbers are out. 2.4% as expected. CPI year to year is lower than the forecast. Month to month is lower than the forecast. We got month to month is 0.1, and we got CPI year to year actual 2.8, which is one lower than expected. We got actual year to year CPI is 2.4, forecast at 2.4. Okay, so we're getting strong movements right here with gold moving to the upside, as long with indices as well. I am not stopped out on my NASDAQ long, which is absolutely fantastic. It's always, it's about to perhaps hit that TP. Let's hope that, well, I'm in a hyper growth account. I don't have any news restrictions. Let's go. Let's go. Okay, so the numbers are out. What does it mean? Risk on, risk on, risk on is what it means. And that's what Dirk is saying here as well. All right, US short-term interest rate futures jump after CPI data. Very, very strong move right here. We have, obviously, the indices are absolutely flying. This is what the indices have been waiting for a long time now. Let's take a look at the EUR/JPY trade right here. What is the EUR/JPY trade doing? Well, what? That's not what I wanted to see. You're going the wrong direction. You're going the wrong direction. You're like supposed to go, you know, supposed to do this. You're supposed to go that way. You're going the wrong direction. So yeah, okay. Well, that sucks. What about Euro USD? What's happening with Euro USD? Well, that's a pump. That is a pump. Yep, that's a pump right there. I like that. Let's take a look at the NASDAQ. What's happening on NASDAQ right now? We got a breakout on NASDAQ. Now, if you look at the S&P 500, it kind of feels like this is what the market has been waiting for, right? It has been waiting for an opportunity to just break above this level in a constructive manner, if you will. Like it's looking for a reason to break out, and I feel it got the reason to break out right now. Looking at the NASDAQ, we have that low time frame breakout as well. For my open long position on NASDAQ, I have my target at, let's see, what is the trade on NASDAQ? My entry on NASDAQ is here. My stop loss on NASDAQ is, let's see, 4 hour. My stop loss on NASDAQ is here. And then where is the TP? The TP is supposed to be 1-to-1. Yeah, that's about right. So that's the TP. That's the trade on. No, that's not the trade, is it? I think this is sort of like the trade on NASDAQ. So it's about to perhaps hit that TP. Now, I'm watching this and I'm thinking I should close the trade, but I can't close the trade because it's automated trading. It's trading based on based on the algorithm that I coded. And it's trading completely automatic. So if I take profit here early, then this winner will be smaller than what it should have been if it hits that TP, which could perhaps create issues with the overall statistics. Because obviously I've tested this in a certain way, and I have not tested how it affects with exiting the trades early. Right, so CPI coming in slightly weaker than expected, which is obviously, as you can see, a major risk on move. This might be because of slippage, so I don't know what specific specific levels you had, but obviously now that you're getting a news event, if you had your stop loss close to price, then that could be because of slippage. That of course is going to affect the USD JPY pair, and also maybe you have to check your daily loss if it's based on equity or balance, and where were you depending on what your daily loss is. We obviously do not close trades for no reason, and it's done automatically based on the account you have and the orders you have in the markets, of course. Okay, we have an alert on Euro JPY. What? It's like, okay, let's go back down. What is this? I need to sit down for this. Like, I'm very, very disappointed. It's have to talk with myself. Sit down. Well, then it sounds like you probably because of daily. I don't know. It probably because of that account. Maybe you had maybe that was a high stakes account or something. But if you feel like it could have been an issue, then all you have to do is just reach out to support, and they will take a look at it for you. Guys, remember, we're only 200 likes away from a giveaway. All you have to do, everyone watching right now, if you hit that like, we're gonna get to 500 likes easily. Just hit the like, and we're doing a giveaway. And you know what? What's really gonna help is if the viewers from Twitter come on here, then we're gonna get to that in no time. Yeah, we'll get to that. We'll get to that 500 likes in no time. If everyone watching on Twitter comes over to YouTube. Well, your JPY is making me sad. All right, Nat's pushing higher. Let's take a look at the... I'm going to take a quick little peek on my personal account, because I have entered a humongous position on this one. I went into the back end, and instead of risking 1% from my copy trading thing, I increased it. It's just a tiny amount. It's just a tiny decimal point. Put a little figure behind that one, and all of a sudden, boom, the power of 0, the power of 10. And when 10x your life, but 10x that position size. Oh, that almost rhymes. You want to 10x your life, then you better 10x that position size. Quote that. That's a short right there, straight on TikTok. I'm gonna be the new. I'm gonna be the new Andrew. Let's call myself Andrew Stop Loss Hunter. Okay, I'm just gonna double check the position here on the live account to make sure that I'm not just having to take a loan or something. You know what? I'm good on the NASDAQ long, but the USD JPY trade is not looking the best. But who cares? It is what it is. That's trading for you. Okay, so let's switch over to Andrew Tete. Yeah, I'm gonna be the new Andrew Tete. Mr. Silver. Yep, I'm sorry to disappoint you, but it's only me here. Victor is coming in about 20 minutes. We're looking forward to that. Having been live streaming with him for quite a while, so really looking forward to pick his brains on the market. What do you think of the next move on gold? Up. I don't even have to look at the chart, but I see up. That's what I'm thinking. Up. We are going up. Oh well, yeah. obviously. But I've talked about this during the whole day today. Been live here on off ever since the morning, and we've talked about this potential breakout on gold. So what I'm thinking right now is, obviously, I want to see gold come down to the breakout area right here around this area. I would want to have my stop loss down here, and I want to have my TP up in this area. And also, this is a breakout of a what I would view as, I don't view this as a falling wedge, obviously, rising wedge. I mean, this is to me a ascending triangle, and then the target move of the ascending triangle is in this area, which also aligns with the high time frame trend. So what I'm looking for here is a retest of the 3,345 area for another leg to the upside. Yeah, so waiting for a retrace back down to that level on gold. I was gonna say something. Yeah, okay. Let's look at the USD JPY. Let's look at USD JPY. I honestly just view this as intraday price action that is not really affecting my overall idea. I mean, this is still, the overall idea that I have on USD JPY. Here's an interesting question. Hello, I've been waiting for you since yesterday. I have a question regarding joining a big funding provider or capital funding. May I ask you about this topic? I guess. Yeah, sure. Do you think gold will retrace? Yeah, I mean, things always retrace after a move like this. Like, you have news moves like this. How often does it not retrace? Like, how many news events do we see prices go straight up? Of course, it's going to retrace. It's always going to retrace. Now, I'm saying that like I know what the future holds, and I obviously don't know that. But when you have a move like this, most of the time it's going to retrace. Trader D, no, unfortunately, I cannot really guide you on that. What I can tell you is that you have a strategy like that, then you don't really, you should look at getting funded. If you're not funded with us, then why not? Just get an account, get funded, and you'll make an insane amount of money. If you however, you're not, let's be honest, you're not generating over 1,000 pips per week. We all know this, and you just copy pasted this text in the comments. I mean, we know what you're doing. This is just advertisement for yourself and your channel. I mean, we've been doing this for a couple of years. We know where this is heading. You're not bringing in 1,000 pips a week with your strategy. If you did, you would not be here asking me for advice. You would be, making a shit ton of money somewhere else. How can I get funded? Now, this is a good question. Now, the way you get funded is you create, first of all, a strategy. So what you do first is you learn technical analysis. And if that's what you're going to be doing, right? If you're going to be trading based on technicals, maybe you want to be trading based on fundamentals, then obviously that's what you should be focused on. But what you need to do here is you need to first understand the foundations of technical analysis. And when you understand the foundations, you then go into a specific branch of technical analysis. So I would first say that what you want to do is you want to cast a broad net over the knowledge base of technical analysis. And then what you do then, yeah, you know what, Anish, I'm just going to ban him. That is just ridiculously and now he's just getting straight from I just getting straight from ChatGPT. Like I do respect that you're if you have been truly following us for a year. However, I mean, I do respect that you've been following us for a while and all of that, but I mean, if you can prove that, if you can provide me with a track record and really prove that you're able to make 1,000 pips a week consistently, and just, yeah, obviously a lot of people would be interested in that. However, I don't believe that that's the case for obvious reasons. Now, the way it goes is most people, they come in here and they say, okay, I got this system, I got this system and I can generate, this amount of money and blah, blah. And then you see that, okay, so we go to the channel of these comments and it's connected to a YouTube channel. And then you look at, okay, so, and the bottom line is he's selling a service, a community or a course or something like that. And then you got to think. You got to be on the lookout, guys. You got to be on the lookout. This industry has a lot of fakes in this industry, okay? Let me just put it that way. I'm not saying you are, but I mean, I don't believe you're making 1,000 pips a week. That is ridiculous. Okay, so Euro JPY. Any update on Euro JPY? Yeah, the update is I don't like it. But I'm gonna hold it. I'm just gonna hold it. Sometimes you're wrong about it, then accept it. I am in sell Euro JPY. Well, I hope you get stopped out. Well, you know what? I hope we both hit TP. I hope you have your TP here, and then it fills, and then it goes straight up to my TP. Gold is starting to retrace. Yes, that's right. Gold is starting to retrace back down to a possible breakout area, and I would be interested in getting in on a long position in this region. I'm monitoring the actually, you know what am I doing? Why am I even monitoring the NASDAQ trade if it's just complete automated? I'm just gonna shut down that MetaTrader. Look at the Euro. Oh my god, I bought a 100k high stakes on Monday. I had credits in my account. I've had those credits for I don't know how long, 6 months or so, and I'm like, I'm gonna save it till the right time. I bought the 100k high stakes on Monday because you know what? I felt very good. I felt quite confident in my trading abilities, And that's the problem, that's the problem. I started with this account and I was too confident. And a really good example of that was me moving that TP on gold. Like an idiot, because I had the whole technical setup right there. Perfect setup. It hit the original TP. Then I'm the stupid one is moving that TP because I'm like, oh, well, things are going well. Well, maybe it's going well because you're not doing stupid things. And then you start doing stupid things and all of a sudden it's not going very well. Okay, can you explain AUD CAD? I can explain AUD CAD. Let me take a look. Okay, let's just do a quick little top-down analysis right here. Let's remove all of this. Man, my neck, I feel like I'm 95 years old or something. At least 70, you know? I'm just sitting here all day doing these live streams like a goddamn shrimp. Okay. AD CAD on the daily. Okay, on the daily, I would say bearish to neutral. We got on the 4 hour, we have a bullish break in market structure on the 4 hour. I would say bullish on the 4 hour. Neutral on the 1 hour, probably. Bullish 50 minute, bullish 5 minute, bullish 1 minute. Okay, so the idea here with AD CAD would be to look for a retrace based on what we're seeing right now. So on the 1 minute right here, we have that level right here. But that's not a level, that's a text. Let's remove that. Okay, so the level that we're looking... Did you hear that? I'll just start talking a little bit. UK swing. What sun? Like, what sun? If, like, I want to take this camera and I want to show you, it's literally pouring down out here and there's no sun. It's supposed to be summer here. I'm supposed to be on the beach, okay? I bought this paddle board or whatever it's called. It's too cold to even look at the look at the sea. Like, look at the lake. You'll start shivering. You know, I'm surprised there's not even. I'm surprised it's not filled with ice. You know, it's like how it's like 14 degrees outside, and this time last year we had like 30 degrees, and I was on the beach. I was literally trading from the beach, and here I am looking out. I'm like, I even removed the cover of the window so I can look at the nice weather, and all I get is losses in the accounts and rain in the sky and depressing thoughts in my brain. Jason says, where's the girl? Well, I can be whatever you want, man. Just tell me. Where I blowing accounts on the beach. You know what? If I'm on the beach, I don't care if I'm blowing or getting funded. Okay, it's that's it. I just realized what I said. That should be an interesting clip. Okay. Take some deep breath. It will calm your mind. I don't have time to breathe. What is this? What is this? Some mindfulness stream? We're trading here. Okay, so AD CAD, I'm looking for a retracement down to 89.18. 89.18. That's where I would be looking for longs. Okay, NASDAQ. First gold. Again, gold. Man, you love gold. Again, gold. It's retracing back down here. So the thing is here, is this a breakout or is it a fake out? Well, obviously it looks like a fake out. Obviously this looks like a fake out. Do I want to be buying this? I don't know, man. I don't know. Only if it's a confirmed bounce. So I'm going to put an alert right here. I'm going to put an alert right there. First you're asking for the girl, and now you're asking for merchandise? Man, I don't know. You can go to store.the5ers.com. Maybe you'll find something interesting in there. Who knows? But we do have merchandise on store.the5ers.com. All right, NASDAQ. What's happening in NASDAQ? We got to move on gold, by the way. This is we got the wick right here. Looks good. Looks good. Should I enter a position on gold? I mean, I don't have a lot to lose. I'm always... I can't believe I'm saying this, but it feels like I'm gonna lose this account. It's a 100k. What's the max loss? It's not 10%, is it? It's like 8, or maybe a 6. No, it is 10%. Okay. Well, I'm in a 3% loss, 2% loss. It's not too bad. Not too bad. So I do have something to lose. Yeah, okay, so you guys see this guy in the comments? He's trying to sell you something, which means he's not a profitable trader, which means the product that he's trying to sell you, the signals, are not profitable. Let's ban him. How do I ban him? Okay, he's gone. Give us a scalping strategy. Man, it's not that easy, man. It's like I can't just give you a scalping strategy, but I'm gonna do it anyway. Yep. I'm gonna do it anyway. Okay, so a scalping strategy. Okay, drum roll. Can we do drum roll? Do we have a sound of a drum roll? We don't have any sounds. All the sounds at. Okay, never mind. Email says, can I take an entry at current price? If you can, if it aligns with your system. If it aligns with your system, then yeah. Okay, so scalping strategy. Now, one interesting scalping strategy that I guess you could say developed, but I've just combined certain indicators. So I'm gonna put on my indicator, and it's not to to talk about the indicator. I don't care about that, but I will show you it because I have certain indicators built into it. You can put this together on your own using all the individual indicators. So I don't think Victor is willing to share all of that, because obviously Victor is a very successful trader. His system is very specific, and I don't think he's willing to share all the details of his trading system, because obviously there's an immense edge in that trading system. It's like me sharing my algos. Like, why would I really be sharing those directly? Because that's where my biggest edge is. If you have an edge in the market, which is something you develop on yourself, nobody buys an edge. Nobody copies another trader and uses their edge. Someone, combines their own system based on the knowledge that they have in the markets. But to ask someone to really share everything is that's not really going to happen in trading. And if you find someone that is willing to share 100% and share everything, you got to think about that. So one thing that I like doing when scalping with the trend, that is adding, okay, let's remove all of this. Okay, so here we have a Okay, so the blue and the gray line right here, the blue one is a 20 EMA and the gray one is a, let me just get rid of the signals right here because that's not what I'm interested in here. Okay, so the blue one is the 20 and the gray one is the 50. And what I'm looking for on a scalping system is for to see price come down and test either the 20 or the 50 or like the area between the 50 right here. And then I have another indicator that I want to add, and that is the stochastics RSI. Now do you see I have a lot of indicators on here, but let's just focus on the stochastics RSI. So I'm going to move that up here. This is an indicator-based scalping strategy. Look at this, for example, right here. Retest. Okay, so what you want to see here on the stochastics RSI is that price comes down, either it hits the 20 or hits the 50 or the area between the 20 and the 50, and then you want a stochastics RSI bull cross with a bullish engulfing candle or something similar, just a bullish strong momentum candle on whatever time frame you're looking at. Now, preferably also you want you want this retest. So now this is not a perfect example because you want this retest to happen on a break and retest as well. So if it's happening like on a level like that, if it's happening down here, so imagine if this level would be, you know, up here, which it kind of is a level here, right? But it's not really the best level for retest, but it's still it's a level, right? And then that's the first thing you want to do. You want to add the 20 EMA and the 50 EMA. So you want to add the 20 EMA and the 50 EMA and the stochastics RSI, and then you look for horizontal levels. And then the last thing I want to do is adding the Fibonacci levels, and especially the area between the 0.618 and the 0.786. And then we add a 50 here as well, because sometimes it's good to have a retest of that. So imagine if price hits like this area of the fib tool, that's what the system is all about. Inside the reload zone or between the 50% fib or something like that. When you get something like that, this is when this system would give me a trigger to go long. Now it's also important to make sure that when this on the 1 minute, it has to align with the higher time frame. So maybe even, you know, align with the 4 hour. And if you're looking at this on a 4 hour, you see that you're hitting a resistance zone. So I would not take this trade as a scalp, because you're basically going long when price has already hit a high time frame resistance zone. Even though that, you know, this might have obviously worked out, but I want to have all time frames aligning. So that's a simple system that you can easily test. It's very systematic. It has very clear, very clear rules and indicators to use. So it's very systematic and easy to backtest. All right, we got someone in the background. Okay. The 1,000 pips is not unreal. Use manual calculated average reversal, breakouts, range, trade frequency, and pip count to achieve. You have to be God mood. No, I mean, no. You're not gonna make 1,000 pips a week. Like, just stop it, guys. Like, come on. What is this? 1,000 pips a week? Yeah. Let's make 1,000 pips a week. Why not make 10,000 pips a week? Why not 100? I mean, why settle with 1,000 pips?
While
a week?
we're at it, let's make it 1 million. 1 million
exactly.
pips a week.
That's what I'm saying,
right?
Victor. Why settle with 1,000? Why not make 1 million?
Only 1,000? Come on,
Yeah.
man. We can do better.
Let's do 100,000 a day. No, we had a guy coming in like saying like, oh, can I ask you some questions on how to get funded, like how to get, approach big funding? And he's like, I have a system on gold where I'm getting 1,000 pips a week. And I'm like, yeah, okay,
Then again, was it only on gold?
Oh, maybe he's referring to the movements on gold.
Okay. Yeah, because in
I
gold,
don't know, though, but
at some brokers, gold pips are counted as each cent, meaning $1 move is 100 pips. But even then, I mean, the focus on a big number of pips is the wrong kind of approach to get this. If you have an edge in the market, you shouldn't be worrying about the number of pips. I don't care if it's even up. I mean, obviously that's going to be extreme, but I don't care if it's 10 pip a week. 10 pip, if you have it all depends on what risk you're running to get those 10 pips. If you're risking 1 pip and you're getting 10 a week, man, you're going to be a genius. So
yeah,
the number,
when I see someone saying like 1,000 pips, that's like, okay, you talk about 1,000 pips, like that's the focus. But for me, it's all about drawdown and profit ratio and sharp ratios, things like that. Like I don't really care how many pips or how big of a move I catch. All I care about is how much did I have to risk to make that amount of money, and can I make it consistently, and then what's the ratio. Exactly.
It's all about risk adjusted returns. When we think about only the pips, it says nothing about the risk we are, how far the stop loss was, how much the drawdown is on these kind of strategies. It really is meaningless without being too too negative or too critical, I should say. That's the wrong kind of focus. On what we need is we need to have a balanced approach, right, considering the risk as well, because otherwise it doesn't mean a thing. And I came in without I will no, I was gonna say something, but never mind. Jonatan, for everyone who I haven't greeted yet, which is everyone, because I haven't said anything when I came in. Hello. Hi there. I hope you're having fun today. We had the US CPI numbers coming in softer than expected on a monthly basis as well as on a yearly basis. And this has caused on EU, actually all the dollar pairs, of course, a lot of volatility. The market is not sharing anything, so let me do that, because otherwise everyone will be wondering why and what am I talking about and why don't I show anything.
Well, before you show that, just give me a second and we'll be right back after this.
That was smooth, Jonatan. You caught me right there. I didn't expect that. Very smooth of you. I like that. Well, because coming back to let's see. I'm gonna switch to my screen if that's okay with you. Are you explaining something that
go ahead. You can switch.
Okay. All right, so what I'm talking about is, of course, EU, and you can see it on GU as well. It's obvious because it's the dollar news, high impact news, CPI, very important for interest rate decisions or future interest rate decisions, right? Is the economy too hot or not? does the Fed have leeway or not in their policy? Very important for the interest rate decision, future policy on of central banks, in this case the Fed, not plural, singular. But what I'm interested, that's all fine, that's all nice and dandy, but what I'm interested is, what is the market telling us? What's the price action? How is the market reacting to this very nice, well, nice, I don't know if nice is a good, adjective in this case, because what's nice about it? It's price action. If you're short, probably you wouldn't think that's nice, right? On EU. So coming back to EU, let's look at this pair, which is the trade from last Thursday, last week, is still on. You can see that that's how this is the kind of not experience, but the ups and downs that when you upgrade a intraday trade or a day trade to a swing trade, which is what I did. You have to accept, you have to switch mentally, because you cannot, once you're day trading, 10 pips is not that much, but when you're, let's say, 40 pips in profit, that's a lot. In the case of EU, that could be half of the day's ATR, right? The range of that day on average. But once you upgrade that to a swing trade, which is what I did, you cannot think the way an intraday or a day trader thinks. You cannot think, okay, I'm 50 pips in profit. If this comes back and goes back to break even, I don't want that to happen. I don't want my 150 or that 100 or 200 sometimes pips to be my target. I don't want to wait for that, right? You have to switch your mindset, and that's exactly what I have to do. I learned doing, which is, once I close that partial position intraday, I let it run and I do my best, and I actually I can actually do that. I forget about the trade, because then it becomes a very low maintenance trade. I don't have to watch it during the day. I don't have to at the end of every day I will reassess if there's anything I need to do about it, but usually it's low maintenance. I don't have to do anything anymore. The stop loss has already been brought up to break even plus a little bit, and I just wait and see if anything happens on the macro level to make me change my mind. Typically, that takes days, if not weeks, to change. In the meantime, I should have hit my TP already, or be out of the trade because of stop loss. So I'm still in this trade for half of actually a little bit more than half the position I had. I actually, this is not the whole position. It's not even the actual position, because I actually added afterwards and didn't want to make it too complicated for the viewers. But this is the main idea, and this is the trade that's still holding. And I'm gonna be holding for this very conservative TP, and I say conservative because, considering the time frame, the daily and the weekly, this is not a big move at all. This is just a couple of actually just the next leg, basically, right before we start menacing or threatening this previous high. All right, so coming from that perspective, actually I should perhaps make this smaller so it doesn't let's see how to do that. I'm gonna make this much smaller so it doesn't obstruct our review that much. All right, so we can clearly see that we're coming from a weekly order block that was created before, which was almost retested. We had a second weekly order block created. That's bullish order flow by definition. And then we are now in that continuation or follow through without even retesting it. If you go to the daily time frame, you can see I mentioned this. I'm not going to go into details, but I mentioned this a couple of times. We have a multitude of order blocks being created, all of them bullish, not all of them. There were a few bearish as well, but the bearish ones were quickly negated, and while the bullish order blocks or structures are being respected, if tested at all. And you can see 2, 3, 4, and actually, yes, 4 order blocks being created. And that tells us who is in control and tells me that's confident as well. I might be wrong on my swing trade. You know, nobody knows the future. If you know the future, send me a DM because I want to talk about it. But nobody knows the future. So if, I can still be wrong on that swing trade, and that's perfectly fine, right? You have to accept it. I'm not going to win them all as long as I know that I did my plan, I follow my plan, and my plan I know from the backtesting has a positive expectancy. However, given the order blocks being created on the weekly and the daily, I know I have the macro pushing me in the right direction, right? Or at least I'm in that direction of them, right? They are more important than I am. Of course, we are just insignificant in the marketplace as an individual. Even if you're trading large lot sizes, you're still insignificant. All right, so that's one thing. So we can clearly see that. Let's go to that's the daily. So the last time, let's look at that on a little bit more. The last order block we had was this order block right here, bullish. It was very quickly, and that was actually the reason for my entry. It was created with these 2 candles. We had a retest, immediate retest, and then before it switched back, we had a second bar which had a little bit deeper of a piercing of that order block, and that was the daily basis of that trade. We went in, and obviously I say this all the time, and it's for a reason. It's exactly for this reason. The market doesn't move in a straight line, almost never does, unless there is CPI and you're only looking for 30 pips or 20 pips, then perhaps. But all the other occasions, or NFP, of course, all the other occasions, it does not move in a straight line. So when I get this on this time frame, and the trade currently is a daily trade right now, once I get that, all of this up and down is just the market breathing. It perhaps not shooting to its target right away. That happens. That's completely normal. You have to switch, as I said, not be too sensitive about the fluctuations of the market once you get in on a swing trade. So we had that daily. We're coming from a daily. The market did create a bearish order block opposing. That's not a good sign, by the way. But still, the majority of the other signs are still very bullish, so that didn't change my outlook on the macro at all. Not only that, the fact that each time we couldn't even come back to that order block for the second time. We had I'll stand corrected. We had a beauty of a retest. Look at this. I'm gonna this is on Fridays. Let me go to perhaps Friday's retest of that daily order block. I mean, this is edge. Pay attention. If you don't have a strategy and you're looking for edge, you want to have big payouts. I know not all of you want that, but for those who are interested, if you want to have big payouts, you're looking for an edge, pay attention. All right, so we have the daily order block right here. That shade, that darker shade, not the one below, but this darker shade. You can see how the market comes to it. And what's the difference? How much does it? This is what is this? 0.2. That's 2 pipette of a piercing. This is how strong. Not always. Sometimes the market reacts to these order blocks, right? There's edge in there. If you know in advance, and of course these order blocks are created days in advance, at least one, before the market comes back to them. I don't have to explain too much, I hope, how you can use this to your advantage, right? Market comes back, look at that kind of reaction. Why? It's not coincidence. It's not, randomly. The market is not random. It is because of that order block right there. That's the power of the order block. If anything disagrees, send them to me. I will convince them otherwise. All right, so we have it here. That was one of the reasons. We can actually, let me get back to where we are. Okay, so we had two wicks. I know they're not big wicks in comparison to the rest of the order block, or to the rest of the candle, but we did have two wicks being created. That one touched almost perfectly that daily order block, and the other one came very, very close. And the fact that we had such a nicer, especially the second time, it means that the market is getting ready for, possibly a move up. And of course, we don't know what the news is going to be, but these things come in beforehand, and they're telling you something that the market is expecting to move up, right? The market is getting ready. The market, that's the appetite, the risk, perhaps a risk appetite or risk aversion, whichever side it is. That's the indication of what the market wants to do, right? Because how are these created, right? These are obviously the whole market on net doing something, right? Everyone, right? If it's not just one big player or one institution, it is the whole of the market that was participating at that moment in that candle, which is in this case an H4. So it is an H4 candle. So what we can say is we have, let me get here. I'm not trying to be artistic on the chart. That's not my strength. So what can we, if we keep on zooming in on the H4, we don't have an order block. We don't have a bearish quasi. Actually, we do have a bearish quasi, but this was the last order block, right? Last entry order block that we're looking to short yesterday, and it didn't get it until today, but very quickly. That's why you need to wait for the confirmation to get into these trades, or the ones that I show on the chart, because not every order block is going to be respected, right? The market cannot bounce off every order block. If we were to do that, it will just compress into going to a straight line, right? It's resistance and support and resistance need to be broken. Supply and demand need to be eventually broken for price to expand range and change direction. Otherwise, it's never going to happen. So this order block, that was the last line of defense for the bears on the H4 to hold price down, and that was broken right there. That is what is that? That was 23 minutes ago. So basically after the news. So we didn't get this indication before the news, but you could see already the stance before the news that what I mentioned about the daily order block being almost retested, that the market was expecting, was positioning itself for a upwards move, right? Doesn't always happen, but a lot of the time the market kind of senses by the way it moves. Price action can kind of give you an idea what the market is expecting, and usually, not all the time, it actually happens, meaning what the news brings out. Other than that, that was the H4 line of defense, which has been broken. So basically, we don't have anything in our way for higher prices. Let's check the ATR for today before we go back to the check and see what you guys are thinking of the price action and what questions you might have. 84, and I see the ATR for today currently. My trading view is a bit. There we go. It's 81. So basically, we already reached, and just by a little bit exceeded the expected days range, because it's.
Guys, I gotta. Sorry, Victor, but I gotta go pick up my kid a little bit early, so I gotta jump off a little bit early today. We've got about 40 minutes left of the live stream, but I will be listening in the background. All right.
Perfect.
All right. I will.
Go ahead.
I'll jump on if I get back in time. Probably not, but I'll try to jump on.
Yes, I'm sure the audience would appreciate that, considering that yesterday they were asking for you almost incessantly, and I thought, how long has Jonatan been away? It's only been a day, and everyone is asking for you. I thought, am I not enough for the audience that they ask Jonatan all the time? I almost got some inferiority complex right there, but it's all good.
Of course, I'm sure they love you.
Do your stuff.
Well, thank you everyone for today, for the comments and engagement. Been really good live stream today, and I will see you all. Tomorrow. Make sure you take this opportunity with Victor. Ask him questions about his system, how he identifies order blocks, and why he likes them. Like, ask a lot of questions, because Victor is really good at answering those questions in detail. So if you want to know, we had a comment earlier that they want you to like record a course and like share everything, but I told them that when you have such a good edge that Victor has, you don't want to be sharing everything in a package. But what you can do is you can share details of it, and then it's up to the viewers to piece it all together, basically. But yeah, ask questions. See you guys tomorrow.
See you, Jonatan. See you tomorrow.
Take care.
All right. So what we have is, as I was mentioning before our little interruption, the market was already indicating to us that the likely direction of the rest of the week is to the upside, and that's the other reason why I still hold my position open. Coming back, what are the opportunities of today? Right, we already reached ATR, but because of today's volatility, we can see that on the 1 minute. Look at that big reaction. It's not unconceivable. It wouldn't be too surprising if price were to expand a little bit and 100%, right? That's a big move, a big 1 minute candle of about 41 pips. That already tells you that, there's a lot of buying, a lot of, huge volatility coming into the market to create these kind of moves. Meaning that I would expect, unless the price action changes completely, I would expect price to eventually, after it creates or comes back to retest some structure, sometimes it comes back all the way to the initial. Let me get this arrow working as it should. Sometimes it comes back to the initial structure before that impulsive move, right? A lot of the time it does that. It comes back to some supply, to some demand area, and then has that continuation, which doesn't always happen, but usually that's the way, one of the ways it goes up. It has that follow-up movement to the upside. We're expecting, we have to see. I don't see anything I can trade on or currently. We do have that order block here, but to be honest, I don't think that's something that's going to happen soon. Let me look at the H4. We're talking the structure below where we currently started that impulsive move. Everything is possible. Sometimes the price, does retrace the whole movement and even a little bit, taking liquidity of everyone who might have their stop still below before actually changing direction and continue on the higher time frame, closing in bullish, etc. It's too early to say anything. It's holding up quite nicely. And actually what I see is the order block, the H4 order block, right, and the H1, which we were looking to short yesterday, they're actually on the lower time frame so far, indicating a possible, flip. See, those are the two order blocks. Previously, they were supply zones, and now they flip, just like any risk resistance support structure line area. They flip and they become the opposite, meaning price. At least the first indication we have is that they are working. They are affecting the market as a support area. All right, so let's check the chat, see what you guys are up to. I like that comment. Hello everyone, thank you for saying hello. UK Swinger, Vinicius, and Henry, all regulars from our community. what do you guys want us to look at today? Is there any specific pair asset you want me to look at, or would you like me to perhaps answer some questions you might have? I'm relatively a complete open book, relatively, if that's even possible. But what I mean is about my strategy. I talk about it very openly, and you can see that I share, a great deal of how I approach the market. And there's already in that approach, there's a lot of edge. It's up to you to build your case, build your data, collect your data, and build your system using anything that test them out, and you will see that the value of them, and it's easy to be profitable once you do the hard work. Of course, if you don't want to do the hard work, then it's very, very difficult to be profitable. If you're able and willing to put in the work, then with time, it's not a shortcut, but with time you will eventually get it. It's something like graduate, right? There's no shortcut to your diploma. You got to put in the work. The months, in the case of a diploma or a career, you have to put in years of studying, and eventually you will get there, but you do have to put in the work. That's something similar with any edge. Maybe it's not going to take years, but it is going to take a lot of work, consistent work, and you will have setbacks for sure. But those who continue will eventually see the light at the end of the tunnel. Okay, so and going to the strategy that I use, I'm very open about it. So you can copy or test a lot of things before you actually reach to the areas that I don't talk about, right? There are things in the strategy that I don't very consciously, that I don't tell, I'm not open about it, like exactly where, how, and when I enter. But I mean, that's just one part of the strategy. A lot of the other parts, and there are bits and pieces that I leave out, but the majority of the strategy is right there. I share it generously all the time on YouTube and on the Discord, and I will be doing it on ABL as well. I am working on a course talking about order blocks, quasis, and how to build that into a system. And it's gonna be very helpful for anyone who wants to use these concepts in their trading. All right, I'm checking the chat to see what are you guys up to. Gold, Ali says gold. UK Swinger says quasis and order block. Yes, that's that is the two concepts that I use. UK Swinger, is that you mean you want me to talk about those? You want something specific, let me know, and I will, for sure, we can discuss that. I'm gonna switch the music for something, let's see, something different. Let me know if you like the sound. I'm gonna switch it to a little bit softer. Let me know if the level of the audio is background music is adequate for you. All right. So we as I said, I just broke the from EU. There isn't anything I would want to trade. I would be interested in this order block, but after the news, and this is below that order block, below the initial move, there isn't, this is not something that is likely to occur. It's the move, right? The market typically moves in a impulsive move to begin with, and then retraces either a long retrace or a more shallower retrace, and then continues in that direction of that impulsive move. So I don't expect this order block is below the initial place where the news came out. I don't expect this to happen. It can happen, it does sometimes happen, but it's not very common to happen where we have an impulsive move. It then breaks that area, the initial area where it came from, and then reverses to go to the other. it does happen from time to time, but what is more likely to happen is that price either within this range from the initial point till the initial peak of that first impulsive move, in between there prices retraces and then continues its way, usually in the direction of the move, right? Something like so, right? And at the end of the day, you will see that it will start not decelerating, not having these big moves as the initial impulsive move. That is likely to happen. We don't know if it's going to happen today, but that's what I'm looking for, because that's the impulsive move, what I'm talking about. And at some point you can expect that this, either it goes a little bit deeper. How deep is difficult to know in advance, and eventually you should see it breaking this high and probably ending the day after reaching something higher. It may retrace back or not. That's too far away for me to say anything meaningful about it, but that's the initial expectation of the market after this impulsive move. So that's what we're waiting for, and this H4 order block is below that, the whole area, behold that whole action to be expected. So this is not something that I'm eagerly waiting for price to come back to. We do have an H2 order block created by that outside bar that doesn't have the H4 alignment, so I'm not going to trade it, but it's still very well tradable, and it's also visible on the 1 hour, which makes it a little bit stronger. That means this order block right here, that order block, where price could come to have a reaction, and that could be all the reaction it will have, or pierce into it and then have the reversal back to bullish order flow. But we'll have to see. It's too early to say. Currently it is holding on that flipped order block that I mentioned earlier. All right, we have a couple of requests, or at least some chats, some messages in the chat. Let me know. Meantime, I see there is a lot of views. Very good. Keep them coming. Hit the like button while you're watching our show. If you think this is helpful, you're enjoying the content, you think you want to see more of this, more of other hosts as well, more strategy, more people telling you how and showing you how they make money that's been always a something of interest of me of mine as I was learning to trade. I wanted to see how others are making the money, are making the profits, are getting the payouts, and it was kind of difficult. And on YouTube, I mean, there's a lot of content out there, but not everyone is showing you everything, right? So what I wanted is to actually see how they break down the market before they enter, while they're in a trade, and afterwards. Not only quick videos that are you don't know how they're not live, you don't know how modified these contents are. So I always wanted to see sort of sit next to an actual trader as that person breaks down and trade, and those are the things that we offer. That is basically the idea of the live trading stream, right? We are the idea is to show you guys what we do on a regular day, how we look at the market, and you start building your own kind of way using different exposures and experiences from us and other traders as well. So if you like the content, hit the like button. Do not forget to subscribe to our channel if you haven't done so yet. Okay, let me check here. We have someone asking for a song. Someone asking for a pound yen. We can surely look at that. I'll keep that in mind. Let's go look at it right away. Why not? That's the GJ, or right? Without knowing too much about the time frame that you or Gabriel you are trading. Thank you for your kind words, Manish. You're very kind. All right, so look at the GJ. First thing I do, of course, as always, I look very quickly to the higher time frame to understand where we're coming. Where is the higher time frame? What are the last order blocks that were created? Structures, I call them. Where are they? Where did we come from? See that monthly order block being was created, and that little wick, that's where you want to be going long after the creation of this order block, right? If you did, you would be in that big, huge trade to the upside. They're difficult to trade, but they're very possible to catch. I do them all the time. All right, so we're coming from this the monthly is telling us that we're coming from a freshly, actually not one but two freshly order blocks on the monthly time frame, bullish ones, telling me that the immediate order flow is to the most recent order flow is to the upside. That's the only information you need. There are bearish structures ahead, but because this is the monthly, it's not very actionable right away. We're probably going to be retesting these highs, but eventually the market is looking to go to this target. So if you have a swing trade, you might want to, like on the weekly time frame, might want to target this monthly structure. Let's go to the weekly. I know most of you guys are on the lower time frame, and this may sound, or this may look like a not so great. Look at this. Look at this. I mean, I don't trade this pair very often. Let me show you how these order blocks are being retested. This is a beauty of a thing, right? Right here at that close of that candle on the weekly time frame, 2 weeks ago, not last Friday, but the Friday before that, you could have been waiting for price to come back to that order block and have that reaction. I mean, you guys see that? This is I don't want to say easy, but this is so obvious that there is so much edge in this price coming back to this order block and having these marvelous move afterwards. Let's see. We have let me check something here. Okay. All right. What I have here is all right. So yes, coming back to the charts, GJ. What else can we say? There isn't a lot. Let me see if we already reached one of the structures. Yes, we did. Look at that. What do you guys think of that? Almost get there, and you get these reactions. I'm gonna sound like a broken record, but that is exactly how I trade. Okay, so the market hasn't reached it yet, but it came very, very close. I would consider that to be a reaction, what we had already from this order block, initial reaction. What else can we see? On the daily time frame, we do have the daily that was formed right there, but of course it is against the order flow. This is the order flow on the daily time frame. Right after it reached that weekly, not weekly, it's a daily order block, but it did reach the weekly order block below us. All right, so we do understand that this order block is a deceleration order block. It's in the opposite direction of the order flow, and the market starts creating them as it is decelerating into a higher time frame order block above us, which is the weekly, which I just indicated right here. Okay, so this is the macro picture, and there's something else we could look at. We did have a non-fresh retest of this order block, but it's already the second retest, right? This was the first retest. It had a reaction. The second retest actually created the kind of reaction you're looking for. It has this movement, this follow through. If you don't know what I'm talking about, it's this, you had the impulsive move from this candle. It creates the order block, right? Leaves it behind, and it comes back in a number of candles, comes back to retest it. Wasn't enough, and this is the actual reaction you're looking for. And then you have the follow through there. This is the move that you want to be catching from these order blocks, right? So we already had the first retest. This is a second retest. Actually worked on the second one, and this is already the third one, and it's already, you know, quite weakened for, you know, ripe for price to continue go higher. So I don't have too much confidence in this bearish structure. It is there. You can expect some kind of a drop, but I wouldn't expect as a swing trader for this to hold too long in the future. We didn't come back to a daily for a that weekly. That's that daily structure. I mean, we do have a very nice quasi here on the H4. Gabriel, was this something? Was this what you were observing? And you thought why this is a great pair to look at? Let me know in the chat, Gabriel, if you're if that is the case, because this is a very beautiful quasi. This is the head, the left shoulder, the neckline. It broke it, indicating its intention to reverse, and is now retesting this entry order block on the H4. Let's see if we can get an entry perhaps out of this. So we have an H4, and we break it all the way down to, on the higher time frames, I expect this to eventually break, but that could happen days from now. In the meantime, you know, lower time frame price action can still have a reaction to, let's say, something to this place perhaps, until eventually it will break that order block on the daily. But in the meantime, you can still get your entry and your TP being hit of these lower time frame structures that are visible. So we do have an H4 reason to get in, and we actually also have an H2. Look at that beauty. That's ooh, I love that. Look at that. I don't know if you guys are, if you know why I express myself that way, but this is interesting. All right, so we do have a H2 order block as well that was squeezed, not entering the left shoulder, but on the right shoulder. The entry is on the right shoulder. This is the left, that is the right shoulder. So let's see, what do we have here else? You have a bit, you actually on the 1 hour, this is the whole area. Right, there we go. This is the area. If the market, this is the conditional. If the market is going to reverse, we don't know that in advance. You always have, no one knows the future, right? I don't know the future. Nobody knows the future. But if the market is going to reverse, and these structures on the daily time frame, this recent bearish structure tells us that there is a chance. The market did indicate the only way this is created is by the sellers coming in. There's no other way, right? And if the sellers came in, they're likely to come back again, even though we think longer term it will not prevail because, you know, of other structures where it came from. It came from a weekly, and it's likely to be going to that weekly. We know in the end it will not hold, but in the interim, it can still have an effect on, you know, lower time frames, meaning the H4, as I indicated, maybe the H1 as well. So what we have is a that means that, and we also have a quasi, which indicated to us that this these two areas, either on the H2, let me see if I can, the H2 being this small, narrow order block, and this bigger on the H1, they indicate possible areas where sellers will come back to the market, and you can actually see that the market reactive. This is first order block on the H2. Let me see if there's one on the H. That was on the H1, also on the H2. That's very interesting. I think this is enough for us to look for quasis on the lower time frame, because indeed I expect price to have a reaction of this. This is too wide for us to look for a short, but I would be very interested if price reacts favorable. Another quasi on some time frame, either the 5 or on the lower time frames, and then we could target at least this, and eventually on the 1 hour we could be targeting that order block, or well, this one has already been mitigated. I would just target perhaps this one, right? The low of that order of that move. That's the TP based on the range of the structure. But first, if the market is going to reverse, then these are the high probability area where it could, not certain, it could do it. Let's mark this as usual. And in the meantime, I want to remind you, we have on our Discord community, we have workshops on every weekday. You can be a part of it. You can join the debate, the discussion about whatever the topic of the day would be. I'll be hosting one. I'll have it's called Coffee with Traders. And we will sit back and relax, talk about anything related to our trading, trading in general, and you can be a part of it. The only thing you have to do is buy an account with the 5ers, and in your hub you will have a link to the Discord community, which is free once you have your account with us. All right, so this is the 5-minute quasi, which is what I was looking for. Look at that reaction. I don't know in advance if this is going to work, but I do like this reaction we are seeing currently, right? So what the idea is that the market comes back to these order blocks, and you put your stop above it, and you can target, for example, that. Right? The market indicates already with this big candle that it wants to go down. It retraces it only to go in that direction, right? Where you enter exactly, that's up to you. But this structure that you're trying to trade from. Okay. Why not use a footprint? Sure, you can use footprint. You can use volume. Otherwise, on futures, you can use many indicator. There are many ways to get to Rome. This is just one way of doing it. To me, I like the order blocks because it's very, very simple. There isn't a lot of things. You're only using the candlesticks to understand what the market is doing, who is in control, and what is the likely areas that the market will react bullish or bearishly to the to price or previous structures. So we have that. Let me zoom into something a little bit more. We have on the 1 minute. Is that the news? Yes, that was with the news. It hasn't reached the 1 minute order block yet. It doesn't always, trigger on all time frames. And it did touch it on the 2 minute. Look at that. I don't make this up. Right? That's a 2 minute entry order block. Look at that reaction we're having on that order block. I mean, I don't make this up. You guys chose this pair, right? So I didn't cherry pick this to show these kind of reactions. Very beautiful, beautiful. No problem. This is what we're here. We're here for you, for each one of you, for your questions. That's the whole idea. The whole idea to engage your questions, and do the best we can to help you become a better trader. All right, so let's see what else. Yuki Swinger asking, so you use the order block on the head for entry? No, not on the head only. It can be on the head. The head obviously would be the last order block to be used, but it doesn't not necessarily need to be the last one. It can be, there can be on the head no structure to be traded, not as defined. And the market may not have left the indications where the sellers, or in this case, the sellers would come in. So you don't know in advance if it is, but it's not always the head. It can be anywhere. One of the rules is anywhere above 50% retracement of that structure. So anyone in this case would be anywhere above that 50%. And that's just a personal arbitrary indication, but you have to test it out depending on, you know, how much, how tight you want your stops to be, and other filters and things you do to your entries. You'll have to look for that balance between being too picky to, you know, crank up your win rate, or being too not so picky, but, you know, your win rate will go down, but your risk reward ratio in that case would be much higher. So it's a delicate balance. You have to find out for yourself where you want to be, which structures you want to be, how selective you want to be trading this. No problem, Gabriel. So that's a GJ. That's on the 1 minute. Of course, we don't know, even if there is a 1 minute structural break here. Actually, it's a 5 minute structural break indicated by that quasi. It doesn't mean that the market, you know, 100% chance will go down from here. No such thing exists. What it does tell you is that if, and that was what I was trying to say, if the market is going to reverse and have a move down, that would be the optimal place to get in, right? It's a conditional. It may not do it, and if it doesn't, you have to accept that, you know, that's a fact. You're going to be stopped out, and that's it. You move on. But if you do get it, you understand that with a 2.5, and this is very, very wide to me, with a stop loss like that, you can easily, well, easily is maybe not the right word, but it's possible to be profitable with this way of trading. All right, so that's GJ. Gonna check the chat to see if we have anything. Awesome. What Chandra asking, what is your entry confirmation at the order block? Well, that's the thing. That's where I get a little bit not vague, but I let it, you be the judge of what is best for you. Obviously, I have a very strict rule where I know exactly what I need to see for a signal for my entry or not, right? But what I do is you can do, not what I do, what you can do is, this is my logic behind it. When price comes back, okay, so on the 1 minute, when price comes back, you have this quasi, let me indicate this. So you have on the 5, let me put it on the 5 minute. Right, so you have the quasi here. You have the established uptrend, in this case an uptrend. You have the break of that neckline, goes all the way down, and it will come back to that order block, right? The order block you identify to be valid to be traded. Here, you can't just put a limit order, right? Maybe someone has a special filter and they are able to put limit orders there because they have a way of knowing when to do it, when not to do it. But I wasn't able to do that. Maybe that's me. That's my lacking, right? I couldn't make the system profitable with limit order, just putting in this structure. So what I do, my logic behind the strategy, once we get to this era, is I need a confirmation. I need a reason to believe or to assess. It's not believe, but to assess that the likelihood that the market is going to reverse is high enough for me to enter, for me to take the risk, right? And what you use is up to you, right? Either you use divergence, you can use EMAs. I don't think they're a great idea, but maybe you can use EMAs for that. You can use the order blocks, right, on different time frames. You can use candlestick combinations. You can use, you name it, anything you think will give you an idea or will signal to you when the market will change. You can use any kind of indicator that is effective in telling you that the market has changed. right? Maybe break a structure on the lower time frames, right? You could look for on the 1 minute, see if you have a breakout structure here, for example, right? So now you have, this is the head on the 1 minute, and that would be my my neckline. Once this takes this point over, my neckline becomes here. We'll get here. So now you have on a, right, you have, this is the on the smallest 1 minute time frame. This is now the structure. If it breaks this, that could be one idea, right? Using market structure on a very low time frame to indicate, to give you that confirmation that the market actually is attempting to reverse, right? That could be a confirmation. I'm not saying exactly how I do it, but you can use what is important is to understand the logic behind it, and what to look for, right? What the question to ask. In this case, what price action indication or what indicators would be able to tell me that the trend and the direction of the market has changed from an upward trend, right, on the lower time frames. Let me get this straight. This direction, and it changed into basically a reversal, right? That's what you want to be catching on the lower time frames, which turns out to be the reversal or reaction of that order block. And if it doesn't stop, it just continues to go up, whatever confirmation you are using should be selective in a way that it will not trigger you into the trade if this just continues to go up, right? If this continues to do this, there's no reason, right? We didn't get the indication or the sign, the signal from the market that it wants to reverse, and we shouldn't want, expect it to do something it's not indicating to trying to do, right? We are only here as price action traders to try to read the market and go wherever the market wants to go, right? Know where we want to go. We follow the market. Okay. All right. So time flies, guys. We are at the end of our stream. I don't know what happened. Someone fast forward the time. Someone is playing with the time lever. All right, that's it for me. I'm going to invite you all to join us tomorrow again, or on the Discord. In the about 42 minutes and a couple of seconds. Get your account if you don't have one yet. Join us where the action is. It's in the tribe, the best trading community out there, the 5ers Discord community. All right, so you can actually see, look at this. I mean, I keep mentioning this, right? Look at this order block, right? This order block was created way, way long ago, but you can see how the reactions are. I know we are at the end. Does not always react the same way, but you can scalp these reactions. They're very scalpable. I know that from experience. All right, that's it. See you guys tomorrow. Thank you for your attention. And wherever you may be, thank you for watching us, and keep hitting the like button if you think this is helpful to you. You want to see more of us. Let us know by clicking the like button, subscribing to our channel, and make sure you are again with us tomorrow. Same place, same time. See you there. Bye-bye.